management's kind of managed towards those quarterly targets as opposed to investing in the long term. Now, the two names we're talking about here, Tom, Apple and Amazon, they're not those types of companies. Jeff Bezos is famous for ignoring short-term fluctuations in profitability and his stock price and investing in the long term. And his shareholders, by and large, have given him the benefit of the doubt because he's performed and the business has really delivered for shareholders. And you could say the same thing about Apple as well, as they invest in new products continually, kind of breaking the model and coming out with new products every year.
Paul, the Bloomberg surveillance audience listens every day, and we give them the headlines, and there's the immediacy, the forecast, this doom and gloom. David Wilson does a great job. And then you and I are reading sell-side people who are raising their price targets. How can that happen?
It's interesting, our good friend from Bloomberg Television, Romain Bostic, just put out his email just minutes ago talking about what's going on in the street. And Apple and Amazon lead that list here. Apple targets raised at J.P. Morgan and Raymond James, cut at D.A. Davidson. Amazon price targets raised at RBC, J&P, Goldman, and Morgan Stanley. The fact is Amazon's at an all-time high, setting all-time highs every day, because if you were to pick one name, Tom, as we've talked about before, that is, really kind of benefiting from the change in consumer behavior from this pandemic, it's Amazon. We're getting more stuff delivered by Amazon, and we're spending more time in the cloud as everybody works remotely. And I think for Apple, Tom, I think everybody's just looking out to the other side, saying, "Hey, this is a world-class company with world-class products, and when the world gets back to whatever the new normal is, there will still be demand for phones and iPads and Macs and all that good stuff."
Do you know, Paul, that sometime here in the vicinity of 4 months from now, they're going to employ a combined 1 million people?
Yeah, it's just extraordinary. We see, remember, Tom, we saw just over the last couple of weeks, Amazon just, announcement after announcement, they need more people for their fulfillment centers. And in a world where the U.S. has lost 26 million jobs or 30 million jobs over the last 5 weeks, anything will be helpful.
Yeah, we will see. Paul Sweeney and Tom Keene with you folks with Bloomberg Surveillance. We're going to drive it forward. We're going to get the market open and do that and finish out strong here as Bloomberg Radio goes through this.
At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
This is a Bloomberg Money Minute.
The pressure washer that means your patio is barbecue ready. the 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Long have I waited.
The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning, I'm Karen Moscow along with Tom Keene and Paul Sweeney, and the S&P 500 is lower at the open. It's down about 2%, down 57 points at 2855. The Dow Jones Industrial Average down 1.8% or 425 points at 23,921. And the Nasdaq's down 2.3% or 205 points at 8686. 10-year Treasury up 630 seconds, yield 0.61%. They yield on the 2-year 0.19%. NYMEX crude oil is up 5.25% or 98 cents at $19.82 a barrel. COMEX gold is down 0.5% or $7.60 at $16.8650 an ounce. The euro 1.0977 against the dollar. The yen is at 106.72. Tom and Paul.
Karen, thanks so much. And Karen, thank you for just killer world-class data checks through the week. It's just been extraordinary across equities, bonds, currencies, and oil. Karen Moscow with the best data checks in the world. We're going to do EM with Damian Sassower. We've done economics. We've done this. We looked at Johns Hopkins and the pandemic. This weekend, you're going to start to think about your April or your March statement. Paul, you got your March statement like a week and a half ago.
Yeah.
And you looked at your March statement and said, really?
Back to work is what I said.
Now you're going to look at your April statement. Probably like me, you were all in cash, so it was a disaster. So now's the most important conversation of the day. Over the weekend, there's going to be modest conversations about, okay, what do we do? We've gotten good advice from Brent Schutte. He's with Northwestern Mutual, and of course that's quiet and older and long-term money. And we're going to try to extend out here beyond a timeline of 48 hours. Brent, good morning as well. How do you regroup after the whipsaw of March and April? How do you reposition a message on May Day?
Well, I mean, I think for most of my clients, they do have the long-term focus that you mentioned. And so step one was making sure that they didn't panic when others did. So we're all taught as investors that, one, this time historically has never been different. And number two, we're not supposed to panic when other people do. And still, the urge to do that in March is so high when the market is falling. And that was step number one. I think step number two, I think investors are always inclined to chase yesterday's winners. And I invite all your Bloomberg users to go on Bloomberg, type in two asset classes versus each other, the price actions, so simplistically, and then overlay recessions. I think recessions have consequences, and they change the leadership of the next expansion. And so my step number 2 is to try to get people not to undiversify or to simply put all their money in U.S. large caps, because that's what's worked over the past few years. And so those are the big, broad points that I think from an individual investor perspective, we've been singing aloud and proud.
So, Brent, one of the things we hear a lot and read a lot is some investors are just taken aback by this bounce back in the market after that 32 or 33% plunge when the coronavirus really became front and center for markets, particularly in the face of all this dire economic data we're getting and earnings data we're getting. Is the market getting ahead of itself? How do you think about kind of the action we've seen in April?
Well, I keep hearing this commentary about the economic data being so bad and how can the market go up with that. I guess I'd break it down into a simple reality is that the economic data has been so bad because we've been so good at our recommended treatment for it. The only one that we had as of a few months ago, and that was called social distancing. And so the reason the market is rising in the face of this bad data is because that social distancing has bent the curve, improved the virus outlook, which means we can now talk about getting back to work, which may mean better economic data on a relative basis. So I'm not suggesting we get it all back. But remember, the market is a relative to expectation tool. There may be better economic data on the horizon. And so I think that's a key point that people keep missing.
Yeah, but Brian, here's the money question, folks. And this is really, really important. How far out is the horizon? I mean, given the shocks and the systemic action that we see, is the typical textbook 6-month horizon now 2 years?
Yeah, I always think investors have to look back to their financial plan and when did they acquire these assets and what purpose for. And I hope no one bought stocks last year that they hope to sell within the next year or panic out of. And so I do think that, all this talk back in March 23rd, for example, we mentioned March, about whether or not that was a head fake and that was going to be a double bottom. And was that like October 2008? And I kept saying, I don't know that anybody knows for certain because this one has a virus attached to it, which is hard to predict. But those people who bought in October 2008, they weren't disappointed on a 3, 5, and 10-year basis. I've never met anyone who said, gosh, I wish I wouldn't have bought October 2008. And so I don't know how long it lasts, but I suspect, like other viruses, it will eventually have an end.
All right, so Brendan, if we're brave enough to look to the other side of this virus, and maybe the old playbook isn't something that we should be wedded to, how do you think investors should be positioning themselves for the next 3 to 5 years?
Well, I mentioned before that I think recessions have consequences. And so, I look at the Amazon commentary yesterday. I mean, companies in the U.S. used to exist to maximize shareholder value. I'm not for sure that's the case anymore. I'm not saying it's good or bad, but I think that's a change that people need to think about. I think about, buyback restraints possibly, anti-big business commentary, negative real yields for a long period of time. I guess I think about those longer term, but I also think about, right now people are trying to navigate the downside of the virus by hiding out in U.S. large caps and those companies that have worked historically and are still working right now. I think that as you start thinking about the opposite side of this, when the economy comes back, small and mid-cap stocks have been hurt pretty hard in the U.S. And those are the ones that cyclically perform better on the other side. And those are the areas that we think right now you should be tilting towards.
Yeah, but what about international? Long ago and far away, like 10 weeks, we were all talking up international, and finally we would pivot to international. Let's begin with the core knowledge right now. Is international dirt cheap right now, Brett?
Yes, it's dirt cheap. I mean, we have a neutral weighting towards our international developed, but an overweight towards emerging. And that's just a reality of, some of those foreign economies have come out of the virus a little bit. So some of those emerging economies are on the other side of this, at least appear to be. And they are cheap relative to their history. And so those are the areas, if you think about where we're at right now, we are barbelled between the U.S. and emerging markets.
So, Brent, we heard from some of the two of the biggest oil producers, integrated oil companies last night, Chevron and Exxon Mobil. How are you viewing the energy space here? Is this just too much risk, too much uncertainty, or is the value there compelling?
Yeah, so we don't really have an explicit sector bet or quote towards energy, and it's only a couple percent of the S&P 500. I guess the one thing I'd bring it back, and the one area that I've talked about with individual investors is don't try to trade the crazy of the short term. And I think a lot of people do try to trade that. Let the computers do that. Let the short-term traders do that. And I point to oil saying, how many of you thought oil would go to negative $37 a barrel? And do you want to try to trade that where it's now recovered some of that? And so, I mean, I guess that gets really specific into a sector, I assume that someone's going to survive. So I imagine there is good value there. And historically, what ends up happening usually is during times like these when earnings go to zero in some sectors, companies are forced out, and the companies that survive earn supernormal profits until they get copycats a few years later.
My friends, this is really, really important because there's such an implication interview to interview that we do that hydrocarbons are literally not an investable asset now. Is Northwestern Mutual suggesting for institutional and individual portfolios that hydrocarbons are a legitimate investable asset?
Sure, we own hydrocarbons in all of our portfolios, and most people who own the S&P 500 do. And so I guess my comments is more of, are we making an explicit, at least on my side, the individual investor side, do we have an explicit weighting towards energy stocks that is over or underweight? And the answer is no. But we do pick that up through our broad index exposure and through some of the funds that we own.
Yeah.
And as I mentioned, some of those companies will survive.
Right. This is an incredibly important observation, folks, and that we're all loaded up with index funds today. And then the basic marketing tone of so many is to find spots to be actively managed. Brett, where are you on that? Should I have an overlaid passive approach, or am I trying to go out right now and find more active management moments?
It's a great question, and we have elements.
It's my only good one of the week, so go with it.
No,
that's it.
I listen to you all the time. You ask great questions, hard ones. I do think right now that if you think about what's kind of proliferated over the past 10 years, typically everything cycles. And right now the world is much more of a macro place, although the past few months, I suppose, people have become more micro. But I do think there's the opportunity for micro investors who focus on, picking stocks to actually add value in the future. And so we typically, when we make a tilt, we use an ETF. We buy actually managed funds to actually own them and harvest their security selection knowledge over a certain time period. And I know many people are completely moving out of active funds. I don't necessarily think that's the way of the future. I do think there's the opportunity now because of the proliferation of people playing the market in a macro way. So think about the reactive markets I've talked about before. People have ETFs now to express their opinions, and they do so on a daily basis, on a minute basis, on an hourly basis. I do think there's the opportunity to arbitrage time horizons and actually to focus on the intermediate to long term. And that includes security selection.
So, Brett, just real quickly, what are your clients telling you, the individual clients at Northwestern Mutual? Are they panicking? Are they trying to look to the other side?
We do as a company, and Tom mentioned this in the opening, have a unique long-term, intermediate to long-term horizon, and that is something that is in our culture from the general account that we have that's been around for 160 years managing money that backs our insurance obligations. That permeates throughout our whole organization. Our advisors do a really, really good job of creating a financial plan and then sticking to it, and that is more of a long-term type of an endeavor. And so, there hasn't been much panic. I would suggest not at all. I think people are worried and they have lots of questions about how long this is going to last. There's a health implication. But from the standpoint of the markets, it's been actually fairly calm here. I think they've done a good job of training their clients.
We got to leave it there, but this is a terrific brief. Brent Shute, the Northwestern Mutual Wealth Management, their chief investment strategist. Thank you so much. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. Former Vice President Joe Biden is denying a former staffer's allegation of sexual assault, saying the accusation is not true. This never happened. It's Biden's first public comment on an accusation of sexual assault by his former Senate staffer, Tara Reid. The presumptive Democratic presidential nominee answered questions about the allegation today on MSNBC.
I don't remember any type of complaint she may have made. It was 27 years ago, and I don't remember, nor does anyone else that I'm aware of. And the fact is that I don't remember. I don't remember any complaint ever having been made.
Biden said he will ask the National Archives to determine whether there is any record of such a complaint being filed. President Trump took to Twitter this morning about people protesting the stay-at-home orders in Michigan during the COVID-19 pandemic. Several hundred protesters, some armed, showed up at the state capitol in Lansing, Michigan yesterday. The president tweeted the governor of Michigan should give a little and put out the fire. These are very good people, but they are angry. Democratic State Senator Dana Pohanke was in the building at the time when some protesters jammed inside the Capitol.
You know, I understand people's frustration who want to get back to work. By far, the most calls we get to my office are calls pertaining to unemployment claims. But Governor Whitmer is right to look at facts, data, and risk analysis as she makes her decisions about how to safely open Michigan's economy. So I have complete trust in her leadership.
Polanyi says after seeing armed men in the balcony of the Capitol, she admits she was afraid. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Very good, Michael Barr. We have the Canadian government with a new head of their central bank, Mr. Macklin. We'll have much more on that. That's just breaking seconds ago, and we'll have more on that as well. Of course, Mr. Carney was talked about there, moving from Bank of England to Canada, but I guess that will not occur. Anyways, it is a Friday. We hope that you're having a restful Friday, coast to coast and worldwide. Futures are negative, or rather I should say the market opened, the Dow negative. This is Bloomberg. Good morning.
I keep my eyes wide open all the time.
This is a Bloomberg Pursuits look at luxury. The wealthiest, most reliable mortgage borrowers in the U.S. are hearing an unfamiliar word from lenders these days. No. The availability of $500,000 plus jumbo mortgages plunged by 37% in March. That's more than double the drop in the overall home loan market. But if you can get that loan, an incredible 950-acre Napa Valley ranch might be just for you. There are rolling fields, a vineyard, several bodies of water, and a compound of 4 houses that have a total of 15 bedrooms. The $25.5 million listing is being pitched as the ideal hideaway for a very wealthy family looking for isolation. College athletes may soon be able to bank on their talent and stardom. The NBA supporting rule changes that will let athletes sign sponsorship deals while in school, a major shift that could let some earn millions of dollars before they turn pro. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
Message and data rates may apply. T&C and privacy terms can be found at Babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Global news.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Long have I waited.
The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
News 20 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stocks are dropping as investors begin May pondering dreary corporate news tied to the coronavirus and a ratcheting up of tension with China. The dollar rising with treasuries as a risk-off mood prevails. The NASDAQ composite is leading declines among the major equity gauges in the wake of some sobering comments from Amazon.com and Apple about the pandemic's impact. And ExxonMobil is also slumping after posting its first quarterly loss in at least 32 years. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 is down 1.9%, down 55 points at 2856. The Dow Jones Industrial Average down about 1.8% or 428 points to 23,912. And the Nasdaq's down 2.1% or 182 points at 8707. 10-year Treasury up 3/30 seconds, yield 0.62%. The yield on the 2-year 0.19%. NYMEX crude oil is up 3.3%, up 61 cents at $19.46 a barrel. COMEX gold little change at $16.9380 an ounce. The euro 1.0980 against the dollar. The yen is at 106.75. Amazon is down almost 6% right now. Apple's down 0.7%, and ExxonMobil is down 2.6%. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Paul, before you bring in good Damian Sassar, I really want to talk about that noise you hear outside your windows, folks, as you're quarantined, and that is the sound of economics worldwide celebrating the appointment of Tiff Macklem to take over at the Bank of Canada. Paul, this is one of the great soap operas of economics. There's a huge tradition in Canada of the deputy governor taking over. Tiff Macklem, once they said no. Twice they said no, and he went off to the hugely prestigious Rotman School at Toronto, where Roger Martin and others are. It's just a first-class academics. And the gentleman who's truly a research economist out of Western Ontario has been appointed the new governor of the Bank of Canada. I'll tell you, meeting to meeting, Paul, to see him finally see this within the hierarchy approach of Canada is really rewarding. Tiff Macklem to take over the charge at the Bank of Canada. Paul?
Yeah, very interesting. Tom Tiff is a veteran of that 2008-2009 financial crisis. So,
yes, big time.
Arguably, a very, very strong choice given these economic issues that the world is dealing with and Canada is dealing with. Talking about some of those economic issues and what it means for markets, clearly emerging markets really getting whipsawed here. A lot of concern about how to play in emerging markets, if at all. And to do that, we welcome back our good friend Damian Sassauer. He's head of emerging market strategy for Bloomberg Intelligence. So, Damian, what are you looking at today here? I mean, we have a risk-off day today, but as you think about the next, 3 to 6 months for emerging markets, what are some of the key themes you're thinking about?
Yeah, hey, good morning, guys. It is May Day. It's time to reflect on how far we've come. The Bloomberg Dollar Index has fallen 50% from its mid-March high. We are seeing some green on the screens, at least this week, in emerging market currencies, for sure. In fact, oh, my goodness, in the Brazilian real, it should close. This will be the third up week of the 18 weeks this year if it actually closes into the green today. So, you see much of the same in the rand and the peso. So it's been just a relentless march lower in all these emerging market currencies. And, you're right. Looking ahead, we have to look to next week. We've got another range of central bank meetings, specifically in Latin America, Brazil, Chile. And, we have some majors like the Norges Bank and the Bank of England as well. So central banks will be in focus for me for sure.
They're in focus for you for sure, but part of it comes out to the gauging of their economies. Do you get any value, Damian, of what I call the PMI derby? It's as silly as M1, M2, M3 from before you were born. We're all going to lather, when is it, Paul? 10 o'clock, you and Lisa in 9 minutes have PMI, right, Paul?
Absolutely.
I think, you get a PMI coming out in 9 minutes. Damian, does any of that stuff matter in your world?
Well, Vetbull and I are going to be looking at the China trade data on Thursday of next week.
Oh, we are. He's lined up for that.
That's going to be the big print for me. Forget payrolls. We know how bad German industrial output's going to be. We know what durable orders are going to tell us. We know about that stuff. But, the trade data is a little more high frequency. And, on the back of that, we're also going to see some reserves data out of China, right? And they love to defend that $3 trillion reserve threshold there. And we'll see how effective they've been at doing that with, all that's going on in the world.
All right, so Damian, Are there places that you feel more comfortable given the uncertainty that the global economy is dealing with here versus others? And how's that changed for you over the last, couple of months here that we've been dealing with this pandemic?
Sure. So, we are definitely seeing a bit of normalization across most major asset classes. That's for sure. But no, there's no place I'd feel comfortable outside of really dollar-denominated emerging market debt, to be completely frank with you. There are some opportunities in the low yielders. I've said that in the past. I do expect a lot of the curves to flatten in many of these economies. Certainly the Philippine peso and the Taiwan dollar are the best performers in my universe. But a lot of that has to do with, the fact that their currencies aren't relatively as liquid as some of the others that have gotten hit as badly, right? So, for me, technicals play a big part of this. And as time goes on, I think what we're seeing here in the U.S., and I have to talk about it, as time goes on, you're seeing delinquencies go up. And that's going to be a theme that we're going to have to, contend with over the better part of the next, month, I would say, to 2 months easy. And I think that's really going to catch people's attention. And I think that's, so for me, it's going to be about credit spreads. It's going to be about, obviously we hear about the moral hazard, but, I think with some of these prints that are coming out, and we have, a bunch of bad prints coming next week. This is General Motors. We're going to see Uber and Lyft. How good have they done in this environment? Some of the, earnings that are going to come out are going to just be brutal. So I just think there's a lot more downside risk there. People have made a little bit of money back here, and I hate to say sell in May, so I'm not going to say it, but, I think a lot of people
there it is. I thought, go away. I thought we'd go away until May. I thought we'd get through the day, folks, without one person bringing it up. Mr. Sassower is the one who brings it up. Damien, thank you so much with Bloomberg Intelligence. Paul, there's that phrase. It's one of my least favorite phrases. Sell in May and go away. Yep. What's the actual math of that? It's a Gina Martin Adams question.
Yeah, I'd have to check with Gina, but I think there's some data behind that if you talk to some of these strategists here. Another one is I just try to avoid the month of October. Maybe that's because I came into the market in my career October 1987. So that's
I'm
fresh
the same
in my
way.
mind. So there's a couple parts of the year that are a little bit dicey.
But we have to explore this in the coming 4 weeks. Sell in May and go away. What's the validity of that, and particularly after this huge volatility? I think, Paul, one of the headlines here, I haven't talked about it one moment today, to reframe the week. The VIX 38 and on fear out to 47-ish. Yeah. And we blow through with those 3 brilliant days down to 33, 32. And we've really given a lot of it back in the last 12 hours.
Yeah, exactly, Tom. And I think some of those earnings coming out, have really been sobering for a lot of investors. But again, I think we're going to get more of that data, Tom. We're going to get more tough earnings, as Damien was suggesting, next week. And we know the macro data is not going to be good for the foreseeable future. But the question is, to what extent is the market discounting to the other side of that, Tom?
I would say thank you so much for our Jobs Day coverage, except it wasn't Jobs Day. It's not the first Friday of May. It's next Friday, and we'll be here to give that to you. The Dow, negative 461. The VIX, 37.70. We are produced by Rich Truman. This is Bloomberg. Good morning.
Hey, y'all. Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Stocks fell at the open to kick off the month of May. Earnings announcements and economic data have been serving as reminders of lasting pain from the coronavirus pandemic. Amazon said late yesterday it might see a loss in the current quarter as it boosts spending to keep logistics operations running smoothly. Sales were higher in the latest quarter and beat estimates, but net income missed. Apple reported quarterly revenue that grew 1% and beat estimates, but CEO Tim Cook said the company experienced a very depressed period in late March and early April. The owner of Burger King, Popeyes, and Tim Hortons coffee shops today reported a drop in earnings and revenue from a year ago, but it wasn't because of Popeyes. Sales at the chicken outlet surged more than 26% in the latest quarter. Restaurant Brands did say that it expects a bigger impact from COVID-19 in this quarter. And crude oil is making a bit of a comeback. It's up about 3%, just above $19 a barrel this morning. Gina Cervetti, Bloomberg Radio.
The markets. No, you can't just run screaming from the room.
A lot of economists are just throwing up their hands and saying, we don't know.
But you don't have to manage this alone.
What are you looking at to give you some sort of compass through this period?
Lisa Abramowitz and Paul Sweeney.
What is your early read as to the scope and scale of this plan?
Bloomberg Markets. Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Friday morning from New York City and points beyond to our worldwide audience. I'm Paul Sweeney. Lisa Abramowitz, my co-host, is off today. Coming up, we're going to chat with Dan Ives from Wedbush Securities, talk about Apple and other big tech earnings that we've seen. Plus, we're also going to speak with Narayana Kocherlakota, former Minneapolis Fed president, on his position about why the Fed should go negative with interest rates. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg, what do you have for us?
Well, Paul, this flash is sponsored by New Jersey Institute of Technology, offering an MBA that provides STEM professionals with a technology-focused experience. Learn more at njit.edu/MBA. Stocks are down as investors begin this month of May pondering dreary corporate news tied to the coronavirus and the ratcheting up of tension with China. Dollars up, along with treasuries, as a risk-off mood prevails. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 1.9%, down 55. The Dow's down 1 3/4%, down 426, and the Nasdaq is down 1.8%, down 164. The 10-year is up 1/32 with a yield of 0.63%. West Texas Intermediate crude is up 1 3/4% at $19.18 a barrel. COMEX gold is little changed at $16.94.30 an ounce. The dollar yen 106.94. The euro $1.0975, and the British pound $1.25.16. ExxonMobil has posted its first loss in at least 32 years. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Paul Sweeney.
Greg Jarrett, thank you so much. We appreciate that. A risk-off day today. Looks like the market didn't like what they got out of Amazon and Apple last night. To get a sense of what is going on in those equity markets, we welcome Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning? What are you leading with?
Well, I mean, you mentioned Amazon and Apple. One thing that's interesting is that Apple's actually turned around in early trading. I mean, it had been lower. Now it's up about 0.9%. So perhaps they're getting a bit of a break. I mean, CEO Tim Cook talked about how, late March, early April was very depressed, as he put it, for the company. And then he said things kind of stabilized here. So it looks like they're getting the benefit of the doubt as far as their results are concerned. And Amazon, not so fortunate when you have CEO Jeff Bezos talking about how they're going to spend $4 billion or more as a result of the coronavirus, having to, buy equipment for their warehouses and whatnot to try and keep their workers safe. That stock down 5.6%. And, you look across the market, I mean, it's clear that Amazon is more in line with what's happening today than Apple. I mean, the energy stocks, though, are really leading the way down here. We got the results out of not only ExxonMobil, as Greg Jarrett mentioned, but also Chevron, and those stocks both taking a hit. ExxonMobil with a quarterly loss, $3 billion in write-downs, part of that off by more than 4%. And Chevron lower by 2.8%. They're looking at, as they put it, results that'll be depressed as long as current market conditions persist.
So I guess that's what the only thing the energy companies can really do, Dave, in the face of falling oil prices is just to cut spending, cut cap spending, operating spending to the extent they can, and just kind of pull in the reins and protect the balance sheet.
Exactly, and that's what Chevron's doing. I mean, they had announced plans to reduce their capital spending 5 weeks ago, and they were doing it again, so bringing it down even more. They're talking about shutting some production, shutting down some of the rigs that they've leased. In fact, most of them, something like 60% of them. So, yeah, I mean, companies are kind of in a hard place here in the sense that, they can't control the price of their product. I mean, the market's doing that for them, and let's just say it's not doing the likes of Exxon and Chevron any favors. I mean, when you look at oil, I mean, it's up a bit today, still below $20 a barrel, though, a long way from prices at which these companies and others can really be profitable.
Yeah, it really raises a question here. We had Fernando Valle from Bloomberg Intelligence on earlier today, and Tom asked the question, when do these big Chevrons and Exxons go in and start buying up some of these smaller shale producers? And Fernando was like, you can wait till they literally go out of business, and then you just have to buy up the debt, and that's how bad it's going to get probably.
Or just buy the fields and not even bother with the operating company. Yep. I mean, these are the sort of situations that are going to pop up. And, of course, there is a bigger question for Exxon. What happens with the dividend? Now, we already know that they've maintained it for their next payment, and then that broke a pattern going back to 2007. But you can go back a whole lot further than that, to the 1980s or so. They've managed to increase the payout every year. And so they could still do that later in the year. But given what's happened in the oil markets, you've got to wonder whether that particular track record is going to go by the boards. And we're talking about Exxon paying out, as much or more than the likes of Apple and Microsoft when it comes to the actual cash they spend on their dividends. So, they're doing all kinds of things, but they say they're going to maintain the payout at least. I mean, we'll see if that track record, though, becomes history here.
It's interesting going back to some of those tech names. We're going to have Dan Ives on in just a moment from Wedbush Securities. But when I think about Amazon, I mean, the stock was at or near its all-time high. So to pull back, 5% or so here doesn't seem like that big of a deal. I mean, we've seen this from Jeff Bezos before, ratcheting up spending and then ratcheting it down almost at will if you want. So it seems like this seems like a reasonable strategy for Amazon to protect its workers and ensure that their, fulfillment centers and distribution centers remain functioning at the highest levels possible.
Yeah, absolutely. I mean, you look at these stocks, Amazon, even with its down day today, is up more than 20% for the quarter. I mean, you can say the same thing about its peers. Apple's up 17%, Microsoft's up 13%, Facebook up 24%. So, sure, you're seeing the pullback in Amazon, but these stocks are doing just fine at a time when you've seen a recovery, but for a whole lot of stocks, it hasn't been anywhere close to that in terms of the rebound.
Yeah, exactly. So we are right smack in the middle of earnings, Dave. Another big earnings week next week. Is that right?
Oh, yeah. I mean, we'll get more of the same. We're kind of out of a whole lot of companies at this point, though. Something like 70% of the S&P 500 is reported. Jonathan Golub over at Credit Suisse, and when he's looking at what he calls fresh estimates, in other words, ones that are made in the last couple of weeks or so, really reflecting the effect of the coronavirus. And he's looking at earnings for the S&P 500 to be down 42% this quarter. So,
wow.
That certainly shows you how bad things might get in light of the coronavirus.
Yeah, and I guess the question is Q2 going to be the trough here for earnings? And then will we see, what kind of rebound, if any, will we see in the third quarter, fourth quarter?
Right. It really is looking ahead because, a whole lot of investors are anticipating a rebound next year. But the question is, how do you get there and what kind of a run-up is there? And it's exactly what you're talking about.
Bloomberg Stocks editor Dave Wilson, thank you so much. We appreciate that. Looking at the markets here, continuing that risk-off feel, the S&P down. Let's call it 49 points on the S&P, 2863 on the Dow Jones Industrials, 375 points down. That's 23,962, so below 24,000 on the Dow. Looking at the NASDAQ, kind of right in line, down 1.5%. That's 138 points. 87.51 is the level for you there on the NASDAQ. Looking at crude oil, because it's been really in the news, we are still below $20 a barrel on WTI crude, but we are up from those lows of, kind of low teens just earlier in the week, up another 33 cents here, $19.19 for crude. Looking at WTI Brent's at $26.45. So a little bit of floor, a little bit of stability there in the oil markets. Looking at the treasury markets, literally no change in the 10-year. The yield is 0.637 on the 10-year. The 2 years at still below 0.2% at 0.195%. So still sub 0.2% on the 2-year. Just extraordinary. The 30 years at 1.29%. Right now, let's head down to Washington, D.C. for world and national headlines with Nathan Hager. Nathan.
Paul, Joe Biden is addressing a former Senate aide's sexual assault accusation for the first time. In his words, this never happened. Tara Reid says Biden put his hand up her skirt in a Senate office in 1993. She says she filed a formal complaint at the time. Biden tells MSNBC he has not reached out to Reid about this.
When she first made the claim, we made it clear that it never happened, and that's as simple as that.
Biden says if there's a record of the complaint, the National Archives should release it. Michigan Governor Gretchen Whitmer is extending her state's stay-at-home order another 4 weeks, despite an armed protest inside the state capitol yesterday. Dr. Anthony Fauci with the National Institute of Allergy and Infectious Diseases says governors shouldn't leapfrog critical milestones against the coronavirus.
Each state, each city, each region is going to be a little different. And there may be some situations where people can go into that pretty quickly because they've already passed the first gateway. But others should not do it if they're still on the way up and they haven't plateaued.
In the UK, Prime Minister Boris Johnson says his country's passed its coronavirus peak. Bloomberg's Leanne Gerrans reports from London.
Boris Johnson has promised to lay out a roadmap to exiting the coronavirus crisis next week, setting out how the UK can get the economy moving again, people back to work and children back to school. The Prime Minister said he wants to encourage the economy to bounce back, but said he does not expect austerity to be part of the post-crisis response. The economic policy response to the pandemic has already cost more than £100 billion this financial year. In London, I'm Leanne Gerrans, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
In these times of loss and crisis, the people you trust to ask the questions you need answered become even more vital.
Should the president, though, impose the Defense Production Act?
Carol Masser and Jason Kelly.
Help us understand what we know so far.
Bloomberg Business Week.
They are on the front line of the impact of the coronavirus.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. That's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
The best of Bloomberg Business Week.
Coming soon, Ricochet, the new action film written by, directed, and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £35 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Dating can be tricky, especially when you can't meet face-to-face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Long have I waited. The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
We're all having to get used to the new normal, and at Birkbeck University, we're experts at being adaptable. As London's evening university, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck, and it's new problem solved.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries, just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils, Find your fragrance in Surf's laundry range.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
The S&P's drop approached 2% in the wake of sobering comments from Amazon.com and Apple about the pandemic's impact. ExxonMobil slumped after posting its first quarterly loss in at least 32 years. Gold heads for its worst week since mid-March. And the dollar's on track for its first increase since the last week versus major peers. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500's down 2%, down 60. The Dow is down 1.9%, down 460, and the NASDAQ is down over 2%, down 181. The 10-year is up 2/30 seconds with a yield of 0.63%. West Texas Intermediate crude is now up 1.8% at $19.19 a barrel. COMEX gold is down 0.3% at $16.8950 an ounce. The dollar yen 107.01. The euro $1.992, and the British pound $1.2538. A measure of U.S. factory output shrank in April at the fastest pace on records back to 1948, prompting a sharp reduction in manufacturing employment as the coronavirus tightens its grip on the economy. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, we're right in the midst of earnings season. We've gotten a lot of the numbers coming out of big tech. Last night we had Amazon and Apple, some big numbers. Next week we have some more, Lyft and Uber and some other names. Dan Ives, Managing Director, Equity Research at Wedbush Securities, is a fantastic person to chat with when we think about big tech. Dan, thanks so much for joining us here. Let's start with those Apple numbers last night. I guess all in all, pretty solid numbers, right?
Yeah, better than feared. I mean, investors, including ourselves, were expecting a horror show, a Friday the 13th type quarter, just given the pandemic and the supply chain issues. And when you rip the Band-Aid off, it was better than expected. And I think you combine that with at least some, rays of hope in China from a demand perspective. I think that was enough for investors to now look on the other side of this dark valley and buy the stock.
So, Dan, what do you make of them, I guess, not giving guidance? Obviously a lot of companies are not giving guidance, but for Apple, that's pretty unusual. They've usually been pretty solid about giving you at least a range of guidance in terms of some of the big items.
Yeah, it's unprecedented for Apple and I think for many companies. And I think the knee-jerk you saw last night with the stock down, and I've talked to some investors that are worried about that, but I take a step back. I mean, right now, when you look at June quarter, given all the variables, all the demand issues, it would be like Cook playing a game of blindfolded darts to give guidance for June. And I think that would be imprudent. And I think right now, most investors are looking past June into September, into next year. That's what the valuations offer. And the important thing is services. That's the Rock of Gibraltar for Apple. I mean, that's continuing to be very strong in that mid-teen growth, and that's something I think a lot of investors are focused on along with China.
So, Dan, I know there's been some discussion about some of their new products, a mid-price phone, a 5G phone, perhaps a new super cycle, if you will, for a 5G phone. How is this pandemic, this crisis, this economic uncertainty impacting those product rollouts?
Yeah, that's really, I think, the bigger question. If you look at what we're seeing with unemployment, the average consumer focused more about their health, groceries, and hand sanitizer than a $1,000 plus iPhone. What does demand look like over the next 6, 12, 18 months? And I see, at least right now, from our data points in Asia, it's showing that this is going to be what I would call a moderate product cycle, not the initial super cycle from 5G, but it's a two-part super cycle, which goes into 2021. I mean, you'll see about 10 to 15% taken off units. But when you look at that, you have 925 million iPhones, just to put numbers around it. 350 million of those iPhones have not upgraded their phone in 42 months. So there's massive pent-up demand, but that's also why they have the lower-end version on the SE with $399 price points, which could be attractive to many consumers in this type of environment.
All right, Dan, in the time we have left, I want to switch gears a little bit. We've got Uber and Lyft coming up earnings-wise. Boy, when you think about those companies, is there just no demand for those products? Does that just kind of dry up? What's the status of Lyft and Uber?
It's a Category 5 storm. I mean, when you think about the gig economy from an Airbnb to Uber and Lyft, they're really in the eye of the storm. Now, for Uber Eats, which was really, I'd say, the black cloud on the story, has now actually become a benefit. But this is another one. Look, we cut our numbers 50%.
Wow.
But I think it's one where if you look at the valuation, can they navigate through this from a liquidity perspective? We think the answer is yes. And then you look at, obviously, a much more moderate growth profile, but I think it's a profitable one, and it's one of these investors, they're looking out 6, 12, 18 months with an Uber Lyft in a semi-normalized environment, obviously one that has just massive uncertainty abound.
So as you talk to the companies, Dan, are they concerned at all about consumer behavior? There may be some permanent changes to consumer behavior that will either work in the favor or maybe against kind of the ride-hailing business model in general?
Yeah, in terms of the gig economy and ride-hailing, it's all headwinds. I mean, there's really no glimmer of positive in this environment. I think they're, from a business model perspective, going to have to do things to get consumers comfortable with the safety of the vehicles from a COVID perspective. And there are concerns. And I think there's one when you look at ride sharing, what the market opportunity looks like on the other side of this dark valley. And I think you're going to have 10 to 15% of consumers that will not get into a ride sharing vehicle, let alone maybe a taxi or mass transportation. So that's definitely a big issue here that needs to be navigated for these companies. But next week, Lisa, is the first step to getting some visibility here.
And just real quick, 20 seconds, how are the balance sheets right now?
The balance sheets, they'll get through the storm from a liquidity perspective, but they're going to have to cut costs. I mean, it's going to be some pain ahead from a cost-cutting perspective.
Hey, Dan, thanks so much for joining us. We always appreciate your perspective on all things technology. Dan Ives is a senior technology analyst for Wedbush Securities. We had some good numbers out of Apple, and as Dan was suggesting here, the business model is pretty robust when you take a look at Apple, when you take a look at the new products they have coming, as well as the growth of their services business, which, as Dan has said, has really been kind of the bedrock for the company and the growth story going forward. So Apple, some solid results. Stock, after trading off initially, kind of coming back. So investors kind of looking towards the other side of that. Next week, though, going to be a tough one for Uber and Lyft. We're going to see those results out next week. And as Dan Ives was just suggesting, you really got to think about all the headwinds that the gig economy companies are really dealing with. And the question is, can they ride out the storm? This is Bloomberg.
This is Bloomberg Money Minute. Stocks are dropping this morning. Apple and Amazon.com highlighting caution about how the coronavirus outbreak will impact their businesses, while U.S. Steel warned of further pain in the job market. U.S. Steel expects to lay off about 2,700 employees as the virus forces the company to idle most of its blast furnaces. Moderna announced a global agreement with Swiss chemical and pharmaceutical company Lonza Group to manufacture 1 billion COVID-19 vaccines a year. If they reach their target, that would be enough vaccines for more than 1/8 of the world's population. Ford briefed reporters on how it will require face masks, check temperatures, and close cafeterias at factories across the continent when it restarts operations at an untold date. And Wells Fargo will temporarily stop accepting applications for home equity lines of credit as it navigates the impact of the coronavirus. The bank is following a similar move by rival J.P. Morgan. Courtney Donahoe, Bloomberg Radio.
When you went car shopping, you meant business. You aced vehicle history searches and test drives. You out-salesmaned the salesman. Now you've got your wheels. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll have the info you need to get more for your future. Go to aceyourretirement.org, because when it comes to speeding past financial challenges, you're an ace. Brought to you by AARP and the Ad Council.
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together. Collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
Are you interested in a challenging...
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling.
It's not impossible.
Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
Prince of Darkness here.
Let's rock and roll.
Blaze is taking British rock legend Ozzy Osbourne and his son Jack on a road trip of the USA.
What?
It's him and I, the open road, father and son, in an RV. Ready?
I'm ready. I feel like the king. It's what you call touring, son.
Ozzy and Jack's American road trip starts Tuesday the 5th of May at 9 on Blaze. Take it on. Freeview Channel 63.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Dating can be tricky, especially when you can't meet face to face. So it's time to get creative with the easy way to replace physical dates, video call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Long have I waited.
The epic finale
Good people will fight if we lead them.
of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
If you're buying anything online, take care and don't pay by money transfer. Always pay by card. Take time to check the seller is genuine, and if you're unsure, then stop and don't send any money.
For more advice on keeping your money safe, visit santander.co.uk.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we're going to chat with Narayana Kocherlakota, former Minneapolis Fed president, on why he believes the Fed should go negative on interest rates. And we're going to chat with Anwiti Bahuguna from Columbia Threadneedle on his outlook for the markets. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Stocks are down, Paul, dragged lower by Apple and Amazon. Apple has actually rebounded just a bit. Tech giants issued quarterly results after markets closed yesterday, which was a day during which Wall Street turned in its best month in more than 3 decades. In advance, U.S. Treasuries and the dollar followed U.S. President Donald Trump reviving an attack on China, speculating that country could have spread the coronavirus, and he's threatening trade tariffs. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is currently down over 2%. That is down 59. The Dow is down 1.8%, down 453, and the NASDAQ is down 2.1 at 187. The 10-year is up 230 seconds with a yield of 0.62%. West Texas Intermediate crude oil is little change now at $18.84 a barrel, with COMEX gold down 0.2% at $16.90.40 an ounce. The dollar yen is at 106.88. The euro $1.10 even. The British pound $1.25.43. Let's look at a couple of the tech stocks that are out there. Now, we said Apple had rebounded a bit. It's currently up 0.5%, up $1.70 at $295.62 per share. Intel is down 2.6% at $58.39 a share. Google, Alphabet is down 0.9% at $13.35.81 per share. Netflix is up 0.75% at $423.02 a share. And if we take a look at Twitter, it's currently down 3.1% at $27.79 per share. Now that's a Bloomberg Business Flash. I'm Greg Jarrett.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It is 10:33 on Wall Street, time for Bloomberg Opinion. Right now we turn to Bloomberg Opinion columnist Narayana Kocherlakota, former Minneapolis Fed president, also professor of economics at the University of Rochester. Narayana, thanks so much for joining us here. Boy, as we think about the response to the pandemic, the U.S. Federal Reserve Bank, I think, is generally getting very good marks from the marketplace in terms of acting early, acting decisively. But you make the argument that the Fed should really consider going negative in terms of interest rates. Give us your thoughts there.
Yeah, thanks a lot for having me on. I think the chairman laid out the case pretty well in his press conference, although he certainly didn't go make the next step of actually going negative with rates, which is he said that the Fed has to be prepared to use all its tools to support the economy and the recovery that we hope it will be coming soon. And that means including going negative with rates. Pushing rates down further would stimulate spending and stimulate on the part of households and stimulate investment on the part of businesses, as it always does, and that would be helpful for the U.S. economy.
What is your view? I mean, I guess, people look at, say, Japan, Germany, developed countries with negative rates. It just doesn't seem right. It doesn't seem like the right strategy, the right policy. How do you view just negative interest rates in general?
I think what's happened is that economies turn to them, as would be true in the U.S. case, when the situation is bad. So you can't just look at a raw correlation between who's using negative rates and what their situation is like and say, gee, it looks like all the countries that have negative rates are not doing that well economically. Well, that's because they view them as this emergency tool that they only turn to when the situation is going badly. The other problem is there's a limit to how negative they're being able to go, or willing to go in some instances. And a quarter percentage point or 50 basis point cut in interest rates, it's helpful, it's supportive, but it's absolutely not a panacea for all possible economic ills.
Has the U.S. ever done that for any appreciable amount of time as a policy matter before?
Now you're taking me a little bit out of my knowledge base, but my understanding is that rates did go negative for some time during the Great Depression. Right. But other than that, no, I don't think.
Right. It's not something typically in the toolbox for the U.S. Fed. So one of the things when we think about the actions by the Fed, is that the concern or the expectation, the assumption is that this pandemic has relatively short life measured in quarters. How about if it's just one in a series of waves of this virus and it actually goes much longer? What does the Fed do then?
I think that's a great question. I think the Fed and Congress, I think, and Treasury. I think there's basically been all these entities in the government have been working together. The perspective is, by the time we get into certainly we get into the fourth quarter of the year, the economy is going to be on a very robust recovery path, and they won't need the further backstopping from the Fed at that point. And I think that's led the Fed and other entities to say, boy, the main job here is to keep businesses alive, try to freeze the economy where it was in February of 2020. Well, that might be acceptable if you're talking about a 3 or 4 month intervention, but if you're talking 2, 3, 10 years, I mean, 10 is obviously quite extreme, but 2, 3 years even, you're really getting in the way of the dynamic flow and processes that really drive the U.S. economy, where we want companies to go out of business because they're not being as effective at fulfilling what consumers want. And we want workers to be able to move from job to job because they're maybe more productive at that new job than they were at the old one. So I worry that these interventions are really designed to be temporary. As the shock becomes more persistent, they're going to introduce more and more distortions in the economy, leading to worse and worse outcomes.
So just real quick, 20 seconds, what do you think about the Fed's decision to kind of go into the corporate bond market?
Yeah, I think that it's I think that it's a questionable one, because I think of the fact that basically I think companies should be facing a lot of risk right now. It's appropriate for them to be borrowing at high interest rates because it's a very risky world. I think the Fed's intervention is getting in the way of that signal from the market.
Yeah, interesting. We'll have to see how that plays out in the coming weeks and months. Narayana Kocher-Lakota, former Minneapolis Fed president and Bloomberg opinion columnist, also professor of economics at the University of Rochester. We appreciate you coming on. You can read all of Narayana's work at bloomberg.com/opinion and OPIN go. That's where you can find all of the Bloomberg opinion work, which is so good. And we love having the folks on here talking about kind of what is going on in the markets and the broader implications for the markets right now. Those markets looking still red. We have the S&P down 1.8%. That's 52 points. The Dow Jones down just about an even 400 points. Right now, let's head down to Washington, D.C. We'll get some world and national headlines with Nathan Hager. Nathan.
Paul, thanks. Joe Biden is speaking out publicly for the first time about a former Senate aide's accusation that he sexually assaulted her in 1993. The presumptive Democratic presidential nominee appeared on MSNBC's Morning Joe.
I'm not worried about it at all. If there is a complaint, that's where it would be. That's where it would be filed. And if it's there, put it out. But I've never seen it. No one has it, I'm aware of.
Biden is calling on the National Archives to release any record that exists of Tara Reade's complaint. She says Biden pushed her against a wall and put a hand up her skirt inside a Senate office building. She says she filed a formal complaint at the time. Neither she nor the Senate office has released a copy of it. President Trump will be running his first campaign ads since the coronavirus shutdown starting this Sunday with a 7-figure nationwide blitz. Brown University political science chair Wendy Schiller says it could allow the president to pivot after more than a month of daily press briefings.
Clearly, his poll numbers were not good based on the sort of inconsistency he displayed in these conferences. Sometimes he's consistent and head on, and then sometimes he's not.
Now, the briefings won't end. The new White House press secretary, Kayleigh McEnany, is making her debut at the podium this afternoon. It will be the first traditional press briefing at the White House in more than a year. Top economic advisor Larry Kudlow says China will be held accountable for the coronavirus outbreak. He tells CNBC other group of 7 nations are concerned about the Chinese government's transparency during the coronavirus pandemic. Kudlow says now what, when, and why is up to the president. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the in the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Economics.
Are we still ultra-accommodating?
Long have I waited. The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Where will 2020 take you? Somewhere where people care. About each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments. I'll fight you. Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
Dream Lab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Brian Windhorst and the Hoop Collective podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Hey, it's Jacoby here from Jalen and Jacoby. And after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air. And they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today. Let's tune in sports on this day. On this day, 1920, legendary slugger Babe Ruth smashes his 50th Major League career home run. His first for the New York Yankees in a 6-0 win over the Boston Red Sox.
Watching fans as he swings around the bases. You're watching Diamond History. This was Babe Ruth, Mr. Baseball.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Get your daily dose of NFL Shop Talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor of a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks drop as investors begin the month pondering dreary corporate news tied with the coronavirus and a ratcheting up of tension with China. The dollar's up along with treasuries as a risk-off mood persists. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 is now down 1.9%, down 55. The Dow is down 1.6%, down 400. The NASDAQ is down over 2%, down 180. The 10-year is down 132nd with a yield of 0.64%. West Texas Intermediate crude is up 1.5% at $19.13 a barrel. COMEX gold is little changed at $16.94.40 an ounce. The dollar yen, 106.88. The euros, $1.10.10, and the British pound, $1.25.60. Chevron is slashing capital spending for the second time in 5 weeks, accelerating supply curves and warning profits will suffer as the oil industry spiral deepens. Full-year spending will be down as much as 13% lower than previously planned. CVX stock is down over 7%. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Just a reminder that Connecticut Governor Ned Lamont will be holding a briefing on COVID-19 live at 11 a.m. Wall Street time. We will have that for you when we get it. Right now, we're taking a look at the markets. A red day in the markets here. When you take a look at the S&P 500, that 33% decline, that sell-off we had as the pandemic really became apparent for investors. We've clawed back almost half of that. The question is, where do we go from here? To help us with that, we welcome Anwiti Bahuguna. She is a head of multi-asset strategy at Columbia Threadneedle Investments. Anwiti, we thank you so much for joining us here. I think a lot of investors are just trying to get a handle on, has the market bounced back too much given what we are seeing in terms of macroeconomic data, given what we're seeing in terms of earnings and lack of earnings forecasts? What do you make of the market right here, Anwiti?
Hi, Paul. Yes, I think the rebound from the bottom we saw in March has been spectacular. Part of it understandable given the amount of monetary and fiscal support we have seen announced since the crisis began. But the speed of the rebound has been spectacular and does seem a bit ahead of fundamentals given what lies ahead for the next foreseeable couple of quarters at least, Paul.
All right, so it's really interesting here. Again, we had just these incredible gyrations down first and then up. How should investors, to the extent they want to look to the other side of this pandemic, how should they be positioning themselves right here?
So I think if you're thinking 12 to 18 months ahead, where we hopefully, Paul, have much clarity on not just not just how the economy will respond, but whether we have some sort of vaccine or therapeutics to help the economy open up substantially, not just gradually. I think 12 months to 18 months ahead, we should not see much difference in our positioning. I think we should see equities, be bonds, and your standard asset allocation will make sense looking ahead, look 12 to 18 months. But in the short term, the bounce back has been, as you mentioned, spectacular and appears to be ahead of where the fundamentals are currently. So looking a few quarters ahead, I think it's probably best to be a little more cautiously positioned and think about how this economy opens up and what do we see in terms of people coming back, consumers spending again, businesses opening up, and the production takeoff.
Yeah, it's interesting.
Cautiously.
Yeah, exactly. Because one of the things that I know has many economists and investors concerned is just the state of the labor market. This is a consumer-driven economy, and we've had, over 30 million jobs lost just in the last 5 to 6 weeks. Just stunning numbers. How does that suggest to you that this economy will come back? How are you guys, what's your base case for how the economy will bottom, where it will bottom, and how it will come back up?
So that is the key question everyone's asking these days. And our base case is that we will not see a V-shaped rebound in the economy. Now, the markets may behave differently, Paul, and as you can see, they already are. But the economy will most likely see a protracted recovery. The numbers you mentioned are stunning. These are very expected, though, because this is a policy-induced shutdown of the economy. So we are encouraging people not to work. But the recovery will from those levels of unemployment is never quite immediate. Companies go out of business. It takes a time to restart. Employment takes time. Some people decide to leave the labor force. All those dynamics makes us think that this will be a protracted U-shaped or a slower recovery than you would think if it was a simple exogenous shock. I think what would be really critical is to build people's confidence to come back to sports arenas, theaters, and start enjoying life again, which drives a large part of the U.S. economy. And we expect that will be a slow process. Now, what would completely change the dynamics is that if we have a sure medical solution to all this, as you can see episodically, when we get some confidence that there will be a vaccine, there will be a therapeutic drug that helps us fight even the virus if someone gets it. Those sort of medical developments can change the dynamic very quickly. But right now, our expectations are that those are slower moving solutions, and likely we are going to see a protracted recovery.
And Whitty, I'm sorry, I have to interrupt here. We have to go to Connecticut Governor Ned Lamont. And Whitty Bahuguna, head of multi-asset strategy at Columbia Threadneedle, thanks so much. Right now, we're going to go to Governor Lamont.
Supplemental. So we will see. But as we've learned, how can Connecticut do it on its own, and what would that look like? Plan for the worst, hope for the best. Very quickly, before Melissa runs through the numbers in detail, we're looking at about a $900 million deficit in this fiscal year, which ends June 30. It's a deficit that really didn't exist until, very recently with COVID. That 900 overstates it a little bit. There's about $370 million that we thought was coming from the feds in this fiscal year. It's in the next fiscal year. So it's really, it's still really a deficit. Thank goodness we kept our rainy day fund intact. That's going to allow us to power through the end of this fiscal year. It gave us a lot of flexibility in terms of putting off some of the tax revenues to give you more of a breathing room as well. And what Melissa and I are trying to do with these numbers now is to do everything we can to make sure that we can stretch out our rainy day fund, not just for this fiscal year, but for the next fiscal year. Do it by also holding our taxpayers and holding our service providers harmless. I'm not sure we'll be able to promise a lot of new tax cuts or a lot of new spending increases, but we're going to try and do best we can, given the current situation, to hold that harmless. The next fiscal year, though, starting in July 1, does look like a $2 billion deficit, and that's plus some additional costs that are fixed. And Melissa will tell you how that drives the cost up to probably more like $2.4 billion. So, you know, if you're doing the math, you're going to see we are going to have to streamline things, make some cuts, work in collaboration with our friends in labor, work with all the different entities that provide services here, see how we can do our best to hold down those costs and stretch our dollars as best we can. I'd also tell you that along the way, we have the Special Transportation Fund. I'd say we spent a lot of time talking about the Special Transportation Fund last year. You know, we had hoped that given a gasoline fuel tax revenues, the Special Transportation Fund would, you know, at least stay solvent for another 3 or 4 years. Right now, it looks like, given the drastic cut in gasoline prices, drastic cut in revenues coming into the Special Transportation Fund with our share of the gas tax, that Special Transportation Fund probably runs out, will eat up the reserve funds by about July 1 of next year. So maybe we can sit down with the legislature. You heard my best ideas on how to shore up our Special Transportation Fund, and I'd love to work with you in terms of other ideas we have to shore this up. And there's not much left in the rainy day fund to, you know, play games with that as well. I just leave you with the fact, before Melissa takes over, that we're working hard every day. I think you're going to see some support from the federal government. How that's allocated, we'll see. You know, today we've gotten about $1.4 billion, and you're saying, well, man, that's pretty good. You've got $1.4 billion. What more can you need? That goes specifically just to reimburse us for COVID-related expenses. You know, testing expenses, healthcare overtime, a variety of things that are specifically related at the state level and at the local level. As Melissa will tell you, we're getting the ledger from the you know, local municipal government within the next week, so we can see what their expenses have been, you know, as well. We've got a preliminary budget on what we can do with that $1.4 billion, and we're trying to make sure that plays out over the course of the next year as well. So we've got that balanced going forward. In addition, there's some money in there for education, for higher education, and there's money there for you know, K through 12 education, and that money is being allocated right now. Some of which I hope is already going to K through 12. And finally, our hospitals obviously are putting out a lot of expense, and they're not getting the revenues they used to get from so-called elective surgery. We've got distributed, I think, about $150 million, give or take, right now to the hospitals to help shore them up. I think that's about 1/3 of the first money dues to the hospital under the federal bill, and there's another $75 billion. So I'm hoping we'll be able to get that money to keep our hospitals, you know, together. They've been heroic, by the way, in getting through this, just like every single hospital worker and frontline responder has been. So look, I'm sorry to ask everybody. We're going to have to do a little more, all of us, on this fiscal front. But we are getting through this, just like we're getting through the COVID crisis, just like you heard yesterday, how we're slowly getting our economy going again. And in terms of clarity and certainty, you'll know when we know how things change. We'll know how fast sales tax revenue starts picking up as we open up different pieces of Main Street economy. You'll know how fast the income tax coming up. Melissa's made best estimates, conservative estimates, which we think get us through for the next fiscal year. And we'll be making updates on this on a monthly basis. Melissa?
Thank you very much, Governor. First of all, I just want to acknowledge
Ned Lamont giving the update on the COVID-19 crisis in Connecticut, talking about the fiscal challenges facing that state and how they're going to have to come up with ways to fill that gap over the next fiscal year. So an update there from Connecticut Governor Ned Lamont. Right now, let's go get a business flash from Greg Jarrett. Greg, what do you have for us?
Well, Paul, the S&P is hovering around down 2% in the wake of sobering comments from Amazon.com and Apple about the pandemic's impact. Exxon, you'll remember, slumped after posting its first quarterly loss in 32 years. Gold headed for its worst week since mid-March. The dollar's on track for its first increase since last week versus major peers. Let's look at some numbers, as we have a tendency to do every 15 minutes on Bloomberg Radio. The S&P 500 is down 2%, down 57. The Dow is down 1.7%, down 413, and the NASDAQ is down over 2%, down 184. The 10-year is little changed right now with a yield of 0.63%. West Texas Intermediate crude is up 0.8% at $19.01 per barrel. COMEX gold is up 0.2% at $16.98 even per ounce. The dollar yen 106.89. The euro $1.10.08, and the British pound $1.25.40. United is warning the demand outlook is awful. The company's bracing for the risk of getting no meaningful passenger revenue into next year. Right now, United Airline Holdings is down over 7%. That's a Bloomberg Business Flash. Bloomberg Markets continues now with a very lonely Paul Sweeney.
Very lonely Paul Sweeney. We miss Lisa Abramowitz. Lisa is off today. Thank you, Greg. Jared, we appreciate that. Looking at the markets, as Greg just reported, a risk-off day today. Let's see where the action is in small and mid-cap stocks. To do that, we welcome our good friend, Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at?
Hits. We'll start there. The Russell 2000 index is down 3.4%. Compare that with the S&P 500's decline of 2%. Biggest drop in the Russell right now belongs to Hub Group. The ticker is HUBG. The shipping company has lost almost 17%. Quarterly earnings trailed analyst average estimate in a Bloomberg survey for the first time in about 3 years. Huron Consulting Group, ticker HURN, has fallen 16.5%. The corporate advisory firm withdrew full-year forecasts, even though results for the first quarter beat estimates. Now, one of the Russell's biggest gains belongs to International Money Express, ticker IMXI. The money transfer service has climbed almost 29%. First quarter revenue beat estimates. And you've got ASGN, whose name is also a ticker, ASGN, has added 14.5%. The staffing company, formerly known as On Assignment, reported first quarter earnings and revenue that were far above estimates.
Bloomberg Stocks editor Dave Wilson, thank you so much for joining us. Today we had the April ISM survey on manufacturing was released. To get the latest, we welcome Tim Fury. He's the chairman of the Manufacturing Business Survey at the Institute for Supply Management. Tim, thanks so much for joining us. Give us a sense of what the numbers told us here as we really get into the teeth of this pandemic and the impact on the economy.
Well, I think we have a pretty good reflection of what happened in April here with this number of 41.5. What kind of really stands out is the rate of change and then the level of change. Let me just bring a couple points up. Our new order level rate of change had not been seen at that speed of decline since 1951. The production level decline had not been seen since 1984. And the absolute numbers that we reached on the new order level hadn't been seen since the financial crisis, December of 2008. And on the production side, the decline, that level of change had never been seen since 1948. So really dramatic numbers here. I think, overall, it kind of feels like maybe we can see the bottom of the hill. I don't think that the rate of change has increased throughout the month of April. I know when I was on the show in early April, I felt that we really couldn't measure where we were because things were still declining. My feeling at this point and the comments from the community, although the comments were 3-to-1 negative throughout the month, what's going to happen first is that the U.S. demand is going to come back with the market stabilizing. And then the global demand will probably arrive first and be reflected in the new export orders. But the single biggest issue that the manufacturers and their suppliers, it will be the ability to ramp back up to meet some level of output before the virus and maintain the social distancing requirements within their factories.
What data will you look at to see that manufacturers are, in fact, trying to ramp up production, maybe in anticipation of the economy kind of reopening?
Well, we have to see new export orders come back to get new orders up. Our backlog also declined during the month. So even though many, if not most, of our facilities were at restricted output, if not completely shut down. So I would like to see prices come back a little bit, and more importantly, I'd like to see the new export order level rise because we should see that come up with China coming back up to some relatively high level of output, and Europe starting up most likely before the U.S. is.
So is there concern from your survey work about the global supply chains? One of the things we learned during this crisis, maybe even during the trade war a little bit, is how tenuous the global supply chain is, as the global economy was really tied to just-in-time inventory, for example.
Sure, two answers to that. So 90% of our respondents 90+% the comments were all about the virus. 76% of the comments were revenue related. 28% were supply chain related. So, clearly they think the biggest threat to their company is really the revenue decline, not so much their ability to get product. But, with that being said, I think there's clearly CPOs and the manufacturing areas, chief procurement officers, are clearly looking at making sure that we're not 100% single source in any particular geographic region. I mean, that's the lesson of all of this. We started to learn that through the tariff activity for the last 2.5 years. But, obviously you cannot have all of your eggs in one basket, because if it's going to risk the revenue output of your company, then that's a bad strategy.
So, Tim, we had, again, you just reported some really tough numbers in April. What is the expectation for May and June? Are they going to be equally as tough, or do you expect to see some type of stabilization?
Well, I think that this is the chair's opinion is that I don't think we're going to see a further decrease. I think that rate of change is stabilized throughout the month. I would not see May being a 50-plus number, but I don't see it falling below 41, which is good. But I think the area that you'll see that first with is the supplier's ability to deliver better, and hopefully new orders, because production is going to be slow. Getting back to a decent production rate is going to be slow and painful.
Well, we're starting to get some of the auto manufacturers coming back. How impactful is that to your survey?
A lot of our respondents support that industry, as well as there being a major part of the transportation equipment category, which is our number 3 industry sector. And it's going to be slow, and it's going to be difficult. The transportation equipment sector is going to be hurt for a while, because aircraft manufacturing is in there too, and that's not looking very good either. But I mean, the automotive companies are supposed to come back up in May. I think right now the target is mid-May, May 15th. But they're going to come back at 25% levels. And then they're going to try to get to 35% and so on. And because of the social distancing issues on the factory floor, it's going to be a struggle. And if there's a virus incident in that facility, it's going to stop any kind of improvement in terms of bringing labor back and improving that output.
Tim Fury, thanks so much for... Yeah, go ahead, Tim. Sorry.
That's pretty typical for all the industry sectors, that we all are dealing with social distancing requirements, which is contrary to efficient manufacturing.
Right. Tim, thanks so much for joining us. We appreciate your thoughts, as always, with the data. Tim Fury, chairman of the Manufacturing Business Survey for the Institute for Supply Management, joining us on the phone from Miami. A very weak number coming in and showing contraction in the U.S. economy. The question is, I think for a lot of manufacturers is, when will the demand come back? The consumer demand, the business demand, the manufacturing demand, and that kind of goes to how quickly or how slowly the U.S. economy opens up. And that appears at this point to be a little bit of a region by region, even state by state or parts of states. So likely to be relatively uneven, as Tim was suggesting. Right now, let's head down to Washington, D.C. for world and national headlines with Nathan Hager. Nathan, what do you have?
Well, Paul, this never happened. That's what former Vice President Joe Biden is saying now about former Senate aide Tara Reade's accusation of sexual assault. Reade says she filed a formal complaint with the Senate after she says it happened in 1993. Biden, now the presumptive Democratic presidential nominee, tells MSNBC the National Archives should release that record.
I'm not worried about it at all. If there is a complaint, that's where it would be. That's where it would be filed. And if it's there, put it out. But I've never seen it. No one has it, I'm aware of.
Biden is getting support from fellow Democrats, including Michigan Governor Gretchen Whitmer.
I would just say that the Joe Biden that I know these stories are inconsistent with what I know and what I've seen in terms of the work that he's done to support women.
Whitmer spoke to ABC News. She is considered on Biden's short list of potential running mates. The House Judiciary Committee is calling on Amazon CEO Jeff Bezos to testify as it investigates competition concerns in e-commerce. The panel says the company hasn't responded adequately to its request for documents related to its relationship with third-party sellers. Lawmakers say they expect Bezos to testify voluntarily, but they reserve the right to compel him if necessary. President Trump is exploring a ban on a government retirement fund investing in Chinese firms that are considered national security risks. The thrift savings plan is scheduled to transfer about $50 billion of its international fund to mirror an MSCI all-country world index that includes China. A source tells Bloomberg the president could block the move through an executive order, though no final decision's been made. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Whether it's another day of market misery, pandemic emergency, or both, one thing will still go right.
We have the latest world and national news.
Karen Moscow and Nathan Hager bring you the most accurate coverage.
The White House is looking for additional ways to support the economy.
Bloomberg Daybreak.
We continue to watch equities around the world.
Weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
If you love them enough to listen to them practice the same song on tuba,
please be done.
Over and over and over and over and over, then surely you'll check NHTSA.gov/the right seat to make sure they're correctly buckled in the back seat.
Sounds good, honey.
Check today at NHTSA.gov/the right seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
To protect her home and family in a disaster, Karen was willing to wade through water, mud, and insurance paperwork.
Yeah, I can do this.
You go, Karen! By simply understanding and updating what her insurance covers and doesn't cover now, she'll be better prepared no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
If not...
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Long have I waited.
The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the USwitch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
Dating can be tricky, especially when you can't meet face to face. So it's time to get creative with the easy way to replace physical dates, video call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks fall as investors reel from earnings reports by Apple and Amazon that show the depth of the pandemic impact on big business. Adding to investor jitters are concerns about fresh tensions between the U.S. and China. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 2.1%, down 61. The Dow's down 1.8%, down 445. And the NASDAQ is down 2.25%, down 200. The 10-year is up 1/32. The yield 0.63%. West Texas Intermediate crude oil is up nearly 2% at $19.21 a barrel. COMEX gold is up 0.4% at $17.0150 an ounce. The dollar yen 106.78. The euro $1.10. The British pound $1.2532. Not even a pandemic can push Elon Musk off the path toward claiming the first piece of his moonshot pay package. It seemed like an insurmountable challenge when Tesla shareholders approved it back in 2018. Now, barring a sudden and massive plunge in the electric car maker's value, the CEO is poised to meet the financial performance threshold and take in a windfall of about $730 million if he exercises them immediately. Tesla right now, though, is down 4%. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Now on Bloomberg Markets, Munis in Focus with Joe Mysak.
Focus on Munis is brought to you by Build America Mutual. When the market is volatile, BAM provides stability. BAM insured municipal bonds deliver default protection, value preservation, and a durable rating. Ask your broker about BAM insured municipal bonds. Well, we're looking, as we hear more and more from state governors around the country, we're really coming to get a sense of the fiscal pressures put upon state and local municipal budgets. The question is, what does that mean for the municipal bond investors that have been supporting these entities to do that? We welcome Joe Mysak. He covers all things municipal bonds for Bloomberg Briefs. Joe, thanks so much for joining us again. So let's talk about this, the stress that states are being put under, the finances of these states, and how much can the federal government actually help them out?
Well, nice to be with you, Mr. Sweeney. It's the federal government is so far providing help in the form of basically note borrowing from the Fed, but is also now looking at possibly $1 trillion package. This is going to be the next, aid package. Nancy Pelosi said she's heard that there are demands for up to $1 trillion. So we'll see. In Congress, they're not they're not meeting right now about it, and states and municipalities are really in a spot. They're looking forward to getting some of this money.
Well, it's interesting. What we've seen, Joe, as you well know, is this virus has not, been equal across the country. Certain hotspots, whether it's on the coast or something like that, in states like New Jersey, Connecticut, New York, certainly even California, bearing a higher brunt of this than some other states. How have the municipal bond market kind of treated some of those high risk states?
The bond market right now is it's trying desperately to get back to normal. So we've seen sales, new issue sales, the last 3 weeks or so, 3 or 4 weeks. So we've seen people come to market. We haven't seen blowout spreads, but you talk about the states under pressure. That's obviously a good idea for New Jersey not to come to market, possibly right now. Although, interestingly enough, Illinois plans to come to market in a couple of weeks. And another issue I wrote about today, the Metropolitan Transportation Authority is coming to market next week, which is sort of astounding because these, Illinois and the MTA, in addition to New York City, of course, have been sort of the faces of the pandemic so far.
What kind of premium will they have to pay, do you think, to get back into the market, given what's really changed for their finances in their states?
Wow. Okay, so Illinois, they are about 400 basis points over the AAA benchmark in 10 years now. So, that's in the 5s, maybe in the 6s, which, right now the AAA benchmark is at 142. So that's what you're getting, 142 tax exempt in 10 years. Now, are you going to get 400 or 500 basis points? I don't know. A lot could happen in 2 weeks. But, it's possible. MTA, obviously less because MTA is higher rated. It's rated A2, investment grade by Moody's. And, it's amazing. There's a credit where the subway ridership has dropped 93%. So the cash has evaporated. And they've gone to the federal government. They've gone to, everyone you could think of asking for money. And, it's just such a fixture in New York, though, that, I suspect it won't do, as badly as perhaps Illinois.
Interesting. I see that state unemployment funds also another area of risk here. They're, going broke from the flood of claims. California, New York, Texas, among states, they're also seeking federal loans. How do you think that's going to play out?
I think there'll be no choice but for Congress to make sure that those funds are topped up. It's an unfortunate squeeze, but this is what happens when you decide to shut down. I guess it's about a little over 30% of your economy, and so we'll see.
Federal government to the rescue. Joe Misek, editor, Bloomberg Brief for Bloomberg News, giving us everything we need to know about the municipal bond market. And, of course, as we hear from governors around the country, Ned Lamont of Connecticut, we heard earlier today talking about the deficit in the state of Connecticut for this fiscal year. We've heard about that from Governor Cuomo as well. Governor Cuomo will have his comments coming up at the bottom of the hour, his daily press briefing, which has become kind of must-listen, must-watch TV to get a sense of kind of what's going on in the state of New York, which has been the real epicenter here in the country and the world for this crisis, this virus here. So we'll get the latest statistics there, hopefully continuing to see the bending the curve down. So we'll have that coming up in just moments. Looking at the markets, we still have red on the screen, really not finding that bid that you would think. We're still down about 2.1% on the S&P 500, off 64 points. The Dow off about 460 points there. So a risk-off day today, off 1.9%. NASDAQ feeling a little bit more of the brunt, actually, off about 2.4%. We'll have more on that coming up later in this hour. Lisa Abramowitz is off today. I am Paul Sweeney, and this is Bloomberg.
This is a Bloomberg Money Minute. Stocks are tumbling as earnings reports are serving as a reminder of lasting pain for the economy. Amazon warned of a possible second quarter loss, while Apple omitted an earnings forecast for the first time in more than a decade. Clorox, however, is boosting its full-year sales guidance. The consumer products company said organic sales will be up 6 to 8% in fiscal 2020. Sales of cleaning products have soared during the pandemic. There are gluts of all shapes and kinds forming nowadays, from pigs to milk and oil. Now brand new cars are being left adrift at sea for days. The crisis have left cars gathering dust on dealer lots, so ships are waiting for days to discharge cargo. And a very different Berkshire Hathaway meeting this year. Berkshire plans to start its virtual event at 3:45 p.m. Omaha time tomorrow, with Warren Buffett and top deputy Greg Abel fielding questions shareholders sent to 3 handpicked journalists. Courtney Donahoe, Bloomberg Radio.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
The market's in focus every business day. The P&L Podcast with Paul Sweeney and Lisa Abramowitz.
Are there some sectors that you want to have more or less exposure to?
The economic news seems to be getting worse and worse.
Analysis of the day's Wall Street action.
What's the thought on Apple here?
From Bloomberg Intelligence, Bloomberg Opinion, and influential newsmakers.
Ward McCarthy joins us right now.
P&L with Paul Sweeney and Lisa Abramowitz. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts. In-depth analysis.
Prince of Darkness here.
Let's rock and roll.
Blaze is taking British rock legend Ozzy Osbourne and his son Jack on a road trip of the USA.
What?
It's him and I, the open road, father and son, in an RV. Ready?
I'm ready. I feel like the king. It's what you call touring, son.
Ozzy and Jack's American road trip starts Tuesday the 5th of May at 9 on Blaze. Take it on. Freeview Channel 63.
Oh. Just there, Dave. Smashing. Great. Really? Night, Steve. Yeah, see ya. Built to take the big knocks. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung rugged range.
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
Long have I waited. The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours. The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Dating can be tricky, especially when you can't meet face to face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we are awaiting comments from New York Governor Andrew Cuomo from his daily press briefing. We will bring that to you when we get it. Plus, we're going to take a look at global oil companies. Really, some tough numbers out of Chevron and Exxon. We'll get a look at what the future looks like with Fernando Valle, senior analyst, oil and gas for Bloomberg Intelligence. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
It's a red Friday fall. Stocks are down as we begin the month of May. Investors are looking at some corporate news that they obviously don't like, tied to the pandemic. Ratcheting up tensions with China is going on as well. The dollar's up as a risk-off mood prevails. Let's take a look at the markets as we do every 15 minutes throughout the trading day. S&P 500 is down 2.4%, down 70. Dow is down 2.1%, down 510. And the NASDAQ is down 2.6%, down 234. The 10-year is up 4/32, the yield 0.62%. West Texas Intermediate crude is in the green, up 2.3% at $19.28 a barrel. COMEX gold is up 0.75% at $17.0660 per ounce. The dollar yen 106.75, the euro's $1.10.11, the British pound $1.25.33. American Airlines received a big blow from Wall Street today. Evercore ISI analyst Dwayne Fenningworth has slashed his price target on Fort Worth-based Texas carrier to $1 from $10. That would imply a 92% rout in the stock, which closed at $12.01 yesterday. Right now, it's down 8.3% at $11 a share. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, we had some really tough results out of the oil giants Chevron and Exxon Mobil here. Not surprising, I guess, with what we've seen, the decline in global oil prices as supply and demand dynamics just really fall apart for global crude. To help us walk us through the details, we welcome our good friend Fernando Valle, oil and gas analyst for Bloomberg Intelligence. Fernando, thank you so much for joining us. Give us kind of the key takeaways, the 30,000-foot takeaways you have from these two giants, Chevron and Exxon Mobil.
Hey, Paul, great to be here. I think, with Exxon, it's really just a tightrope. They have to balance their balance sheet at the same time as not cutting too much spending because their portfolio is in dire need of a revamping. And that's what we saw from the call even with Darren Woods. They can't really afford to cut too much because if they do, they just jeopardize their ability to sustain the dividend into the other half of the rest of the future. With Chevron, they're in a much more comfortable position. They have a good portfolio. They had a lot of growth that came through over the past several years, and they have the best balance sheet in the business. So they can afford to cut a lot of their CapEx and still sustain that dividend even through this downturn. So it's really a tale, too, of what happened 10 years ago paying out now, where Chevron really did their homework in the prior decade, and they're sitting pretty relative to all of their peers.
So for ExxonMobil, let's go back to that dividend issue. We're seeing lots of companies across many sectors, reducing or eliminating their dividend because recognizing that this is really going to be a threat to their liquidity and to their capital. What's the feeling at Exxon? They seem pretty adamant about not cutting their dividend.
Well, I'd actually say from the call, it was the first time they even entertained the idea that a dividend cut could eventually happen if this lasts for a long time. Darren Woods, the CEO, painted a fairly optimistic picture about a recovery. We don't know that materializes as rosy as he's painting it. But after Shell cut their dividend 67%, first time since World War II, it's really showed that the industry has to rebase to a new future. And we really don't know how consumption is going to come back. We've seen in China that there's been more gasoline consumption because people are avoiding public transportation. But on the side of trade and certainly on the side of airlines, that demand is going to be subdued for a very long time. And that all impacts their ability to recover their profits and essentially maintain that capital structure that was built for an oil price at least double what we're seeing currently.
So, Fernando, have the big oil companies received any federal support from some of the fiscal stimulus plans we've seen?
Not so far, not the large cap ones, and really, there's very limited room for them to outwardly support these companies. The oversupply is global, and we're already seeing a response, be that the OPEC plus cuts.
Fernando, I'm sorry, I have to interrupt, Fernando. We are going to go to Governor Andrew Cuomo. Fernando Valle, oil and gas analyst for Bloomberg Intelligence. We thank you so much for talking with us. Right now, let's go to New York Governor Andrew Cuomo.
It was only 30 days ago that we saw the number of cases, the number of people coming into hospitals, the infection rate, everything was going straight up. That number would have just continued to go straight up. And that's why all the projections, national projections, state projections, local projections, turned out to be incorrect. Excuse me. Because they were all believing that that line was going to continue to keep going up. What happened is New Yorkers, Americans, changed reality, literally changed reality. They literally changed the path of the virus spread and reversed the spread, and that's what the closed down procedures did, that's what the masks have done, that's what the socially distancing has done. And New Yorkers and all across this country, you saw that number change from that up trajectory to the downward trajectory. That shift in the trajectory reduced by about 100,000 the number of New Yorkers who would have been hospitalized. 100,000 hospitalized. To be hospitalized, you have to be seriously ill. A portion of those 100,000 would have passed away. So all this inconvenience, all this turmoil, for what? To keep 100,000 people out of hospitals. That's for what? And the 100,000 people into hospitals would have overwhelmed the hospital system, would have been chaotic. That's where Italy was. And a number of those 100,000 would have died. So remember that context. And not just for the retrospective, but for the prospective. Our past actions changed the past trajectory. Our present actions will determine the future trajectory. It is that clear. It is cause and effect. You tell me what we do today, I will tell you the number of people sick tomorrow. So every day we get up, every day everyone says, oh my gosh, I have to do this again. Yes, but what you do today is going to determine the number of sick tomorrow. And New Yorkers have continued to do what they have to do, and you see that number of hospitalizations dropping. And that is all good news. And that is a credit to the community and the social conscience and the responsibility of New Yorkers. The question now is, as we're on the decline, how fast is the decline and how far is the decline? How low will the number actually wind up? Right now, we're at about 1,000 new cases per day, okay, in the 900s. 954, 933, 970, 973. That's 4 days. Day before that, it was 1,076. That looks like the number is flattening, is plateauing at about 900, 1,000 cases. 3, 4 days, 5 days, if you want to say between 900 and 1,100. That is still too high a number of new cases to have every day. It's not where we were. It's a lot better than where we were, for sure. But 1,000 new cases every day is still a very high infection rate. It's still a burden on the hospital system. So we now want to take it to the next level. Let's drill down on those 1,000 new cases. Where are they coming from? Why is the infection rate continuing? Who's getting infected? And let's get more targeted in our response, right? We're fighting this statewide, but you have to wage the battle, wage the war on many fronts. It's a statewide battle. Now that we have it basically stabilized and on the decline, the enemy is on the run, the virus is reducing, let's get more refined, more targeted. And I'm going to be speaking with the hospitals this afternoon and say that we want to get more specific information on those new cases that are coming in the door. Where are they coming from? Who are they? To see if we can come up with a more specific target. If you look at the past few days where the cases have been coming from, this is a 3-day, what they call rolling average. But you see, 17% from Manhattan. Much of it correlates to population, but much of it also correlates with downstate New York. 17% Manhattan, 17% Kings, 12% Bronx, 11% Queens, but then 10% Nassau, 7% Westchester, Suffolk. So it's a downstate region, and then upstate, it's Erie County. So gives you a snapshot of where the cases are coming from, but we need more specific information to have a specific battle plan. Literally, where do the new cases come from? Are they essential workers? Are they people who are staying home and getting infected by a family member? Or are they essential workers who are still traveling and possibly getting infected at work? Where do they work? How do they commute? Is this a question of getting infected on public transportation? We just announced new subway buses, Long Island Railroad, Metro North, protocols. Where in the state are these people who are being transferred from a nursing home? What's their sex? What's their age? What's their previous health status? What are the demographics? Let's get more specific information from the hospitals to see if we can come up with a strategy that is more tailored to the reduction of these 1,000 cases per day. The number of deaths, 289, lower than it has been, but still tragic and terrible. And all the good numbers, all the good news, for me, every day, this number just wipes that all away. We announced a statewide policy for our schools. We did it last March 18th. We said that we were going to close schools all across the state, K-12 and higher education schools. We waived what was called the 180-day requirement, which was a state regulation that schools had to have 180 days of teaching. Schools then transferred to distance learning programs, meal delivery services, child care options for essential workers. That has actually worked out well, not perfectly. We had to do it in a rush, but there are lessons that we can learn here that could change teaching going forward and teaching in these types of situations going forward. But it did work. It basically functioned well. And teachers did a phenomenal job stepping up to do this. It was a hardship on everyone, but we made the best of the situation. Colleges and universities were also moved to distance learning. Campuses were closed unless a student really needed housing on the campus. Schools, obviously, by definition, have higher density. They have transportation issues, kids who are getting on a bus. We didn't have the protective measures to put in place. You have 700 public school districts, 4,800 schools in this state. Then you have 1,800 private schools, 89 SUNY and CUNY campuses, 100 private colleges, in total is 4.2 million students. So the decisions on the education system are obviously critically important. We must protect our children. Every parent, every citizen feels that. We must protect our students. We have to protect our educators. And given the circumstances that we're in and the precautions that would have to be put in place to come up with a plan to reopen schools with all those new protocols, how do you operate a school that's socially distanced, with masks, without gatherings, with a public transportation system that has a lower number of students on it? How would you get that plan up and running? We don't think it's possible to do that in a way that would keep our children and students and educators safe. So we're going to have the schools remain closed for the rest of the year. We're going to continue the distance learning programs. Schools have asked about summer school and whether we'll have attendance in schools for summer school. That decision will be made by the end of this month. Again, nobody can predict what the situation is going to be 3-4 weeks from now. So we're trying to stage decisions at intervals that give us the information, but also enough time for people to make the preparations they need to make. So any decisions on summer schools will be made by the end of this month. But in the meantime, meal programs will continue. The child care services for essential workers will continue. And then we want schools to start now developing a plan to reopen. And the plan has to have protocols in place that incorporate everything that we are now doing in society and everything that we learned. We're going to be asking businesses to come up with plans that safeguard workers. When they reopen, we need schools to come up with plans also that bring those precautions into the schoolroom. And that's for schools, that's also for colleges, and the state will approve those plans. Related issue that we need to discuss and we need to pay attention to, this COVID crisis has caused significant disruption and many unintended consequences and ancillary issues that have developed. And one of them is when you have people who are put in this situation immediately with no notice, it has caused serious mental health issues. You have anxiety, depression, insomnia, loneliness, that feeling of isolation. We're seeing the use of drugs go up. We're seeing the use of alcohol consumption go up. This is a chronic problem. If you're feeling these issues, you're not alone. As a matter of fact, half of all Americans have said that their mental health has been negatively impacted. Don't underestimate the stress of this situation. And it happens on a lot of levels. 3 out of 4 say that their sleep has been affected. You don't know where your next paycheck is coming from. You don't know if your job is going to exist. You're at work one day, the next day they say everything's closed, stay in the house. You're in that house in a confined situation, or you're in an apartment in a confined situation. You can't get out. It's difficult. For emotional support, we have a hotline that is set up. People shouldn't be shy in any way or have any second thoughts about calling for help. It is a pervasive problem, and people should make the call and get the help if they need the help. We also see, in line with what we're talking about, a dramatic increase in the incidence of domestic violence. There was a 15% increase in March, a 30% increase in April. That's March is when this started, 15%. April, 30%. That is a frightening rate and level of increase. Again, New Yorkers in need, we have a domestic violence helpline, 844-997-2121. You can call, just discuss the issue. You don't have to give your identity. You don't have to say where you live. But people who need help should reach out. There is no shame in reaching out and saying, I need help. This is a national epidemic. It's a statewide epidemic. Ask for help, and we're here to help. We're especially concerned about these issues for frontline workers. I mean, just think about what the frontline workers are going through. Think about what the healthcare workers are going through. They're working extended hours. They're seeing a large number of people die. They're working in very frightening situations. They're worried about their own health. They're worried if they get infected. They then have to go home, worry if they're infected. Are they bringing that infection home? So this is a terribly stressful, difficult time, especially for the frontline workers. And we want them to know that we not only appreciate what they're doing, but we're there to support them, right? Saying thank you is nice. Acting in gratitude is even nicer. So we have a special emotional support hotline for our essential workers. And we're also going to direct all insurers to waive any cost-sharing copay deductibles for mental health services for essential workers, which means the mental health services will be free for frontline workers, and they'll be at no cost. And too many people, too many families have said to me, well, you know, I would go for services, but I don't want to pay the cost. I can't afford it. I don't want to take that money from my family. That's gone. There is no cost to get mental health services. So just wipe that reason away and get the help that you need. It's even if it's even in the best interest of your family. Last point, personal opinion. Who said when life knocks you on your rear, learn, grow up, and get back up? Was it A.J. Parkinson? It was not A.J. Parkinson. It was me. Nobody ever said that. Just me. When life knocks you on your rear, ... learn, grow, and get back up. This has been a very difficult situation for everyone. But when life knocks you on your rear, learn and grow. And we will collectively learn and grow. We're going to learn many difficult lessons from this situation. We're going to learn about public health threats that we never saw before, we never heard of, we never really anticipated, we never actualized. Everyone talked about global pandemics and that possibility, but you know what? Until it happens, people don't really get it. Our hospital system and how that works and how it works in an emergency, how teleeducation works, how telemedicine works, how you keep society functioning during an emergency, how you communicate to people the dangers of a situation without panicking people, because you still need essential workers to come out and do their job. You don't want to panic people where they say, I'm not leaving the house. But you need to communicate the facts so people act responsibly. How do you do that in a short period of time? What do you do about public transportation? You learn the whole lesson with the downstate public transportation system. So there'll be a lot to learn from this, which we will learn and we will be the better for. I believe that. And that's part of life. In the meantime, we have to go day to day, and we try to make the best of a bad situation.
We've been listening to New York Governor Andrew Cuomo with his daily press briefing, giving us the update on everything that is going on in the state of New York. And I think the data continues to trend down. That's kind of what we saw from the governor. So that is the good news. But he is also taking today to focus on mental health, the mental health of everybody in New York, including and really focusing on those frontline workers, which are really doing heroic work. But as Andrew Cuomo noted, are really feeling obviously tremendous stress associated with their job. So talking about some of the steps the state is taking to help ensure mental health of those frontline workers. Let's get a quick data check here in the last minute. We have the S&P still red on the screen. It is a risk-off day today. Those earnings last night from some of those big tech companies kind of spooking investors a little bit here. We have the S&P off 2.7%. That's 79 points. Dow off 580 points, 2.4%, 23,765 on the Dow Jones Industrials. That's your level there. Looking at the NASDAQ, again, taking more of the brunt there, reflecting, again, some of those numbers from Amazon and Apple, just a little bit shy of kind of where people were looking for. The NASDAQ off 3%, 270 points. That's 86.18 on the NASDAQ. WTI also slipping just a little bit down to $18.75 a barrel. Looking at the Treasury, up 730 seconds, getting a little bit of a bid there, pushing that 10-year yield down to 0.61%. Coming up, Balance of Power with David Weston. That'll be just moments, driving the conversation forward. For Lisa Bromwitz, I'm Paul Sweeney. This is Bloomberg.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local listings. That's saying 6.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Long have I waited. The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours. The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries. Just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
Want Apple's latest Mac?
From just £34 a month.
With no deposit.
Buy online now from krcs.co.uk. Your local Apple experts. And get your Mac with all this, plus 2 years warranty.
And free next day delivery.
See our full Apple range now at krcs.co.uk. Representative example, cash price 103306. 36 months at 33.97. Total payable 1222.92. Representative 11.9% APR.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
from New York to our Bloomberg television and radio audiences worldwide. Welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston. I'm going to start again today on the markets. We now have the second day in a row right now of equity markets being down after a wonderful, wonderful April. So Abigail Doolittle is here, and she's going to explain to us exactly what's gone on so far in May.
There does seem to be a bit of a mood shift here for investors, David. Starting yesterday, you were mentioning that this could potentially be the second down day in a row. Wednesday, of course, we had that the Gilead virus drug rally, gave some of it back yesterday, and then today we have some of these earnings that investors are a little bit less than pleased with. In particular, Amazon. Apple put up a mediocre quarter, anemic quarter, I should say, withdrew guidance. That stock is basically flat, but Amazon right now down sharply, down 7.7%. And what investors do not like there is the fact that while sales are really off the charts, up 32% on a unit basis in the first quarter, the best since 2012, and they're expected to make $4 billion in this current quarter, they're probably going to plow most, if not all, or more of their money right back into the business on what are being called COVID expenses. Now, typically, David, this company gets a quote-unquote pass for that, growing for the future. In this case, they're not. It probably has something to do with the fact that this stock simply went too far, too fast into today, up 34%, so giving a lot of that back. And speaking of too far, too fast, Tesla ahead of today at one point this week had been a double on the year, but right now down about 11%.
Yeah, down about 11%, Abigail, but its CEO appears to have given it a little push or so. I mean, he came out with some tweets which are pretty extraordinary.
I would agree with you on that. It's very hard to interpret these tweets. Elon Musk tweeted not so long ago saying that the stock is too high in his opinion. He also put out a couple other tweets saying that he's selling many of his physical possessions, including not owning a house, give people back the freedom. Now, it's known he is known for shooting off the cuff sometimes in terms of tweeting. So it's difficult to know how serious he is around this. Will we get a mea culpa at some point in the future? But from a valuation standpoint, this stock is way too expensive. If you were to look at it on a valuation standpoint, 31 times enterprise value to EBITDA, 110 times forward PE. And the chart, yesterday you were asking about technicals. This chart is caught in what could be a possible double top. If this chart, if this were to confirm, and there's no reason right now to think that it would, but if it does, it would suggest the stock is going to go significantly lower from these levels. So this tweet from Elon Musk really extraordinary, as you said, in terms of maybe even fiduciary responsibility to shareholders to talk about the stock in that way. Certainly down sharply on the day, but over the last 2 years, up 131%. It'll be interesting to see if that gain, that huge gain over the last couple of years, reverses, and that tweet, that series of tweets, some sort of impetus for the selling, David.
Yeah. You don't see that from a CEO, but it is, after all, Elon Musk. Thanks so much to Abigail Doolittle on the markets. And now we want to turn to the Federal Reserve. The Federal Reserve, let's be honest, is doing some things we never thought we'd see it do, including lending some money directly to companies, including small and medium-sized companies, under that Main Street lending program once it gets up and running. We welcome now Professor Daniel Tarullo of Harvard. He, of course, is a former governor of the Federal Reserve. So, Governor Tarullo, thank you so much for joining us. Tell us about this, because it is something we don't normally see the Fed do. You've been there. Do they have the competence to do this? Are they out over their skis, as we say?
Well, David, I think they've been put in a very difficult position. Essentially, Congress wasn't able to make a lot of the decisions in the CARES Act, and so in essence has pushed it to the Fed to put together lending programs, not just for the kind of securities that they lent against in the great financial crisis, but as you say, the Main Street program, the municipal program, and the like. And as I say, I think it does put them in a difficult position. And you heard Chair Powell in his press conference on Wednesday really reflect that when he emphasized several times that the Fed is under statutory instructions not to lose money. That's number one. Number two, everything they do in these extraordinary programs has to be agreed to by the Treasury Department under the terms of the Federal Reserve Act. And number three, it just puts them under a lot of political pressure. I mean, what was it, 2,000 comment letters on the Main Street program? Those were not coming, I assure you, from average citizens, right? So they're being pushed in a lot of directions. It's something very new. And it just, as I say, puts them in a difficult position both operationally and politically.
So, Dan, as you suggest, the criticism can come and is coming from both sides. On the one hand, saying you can't lose money, you're not supposed to lose money, never have supposed to lose money. On the other hand, you're putting too much restrictions on. For example, Glenn Hubbard has been critical, saying there are too many restrictions here. You should be willing to lose more money. How does the Fed resolve that?
Well, I think that's what you're saying. I think it's essentially impossible for them to resolve it in the short term, and they are under pressure on the one hand to get money out the door, and on the other hand not to make any mistakes. I mean, it's a very difficult position. You need to get the money out the door. Chair Powell was asked about that on Wednesday, and yet the Fed has already seen what has happened with the PPP program and all the questions and all the reports and all the criticisms that have taken place. So I think that's probably one of the many reasons why the Main Street program in particular has been delayed, and you saw what they came out with yesterday. It's now substantially more complicated, and that's probably in part an effort to both be more responsive to the needs, but also to try to fend off proactively some of the criticisms.
And Dan, what is the lodestar here? I mean, in normal circumstances, you had sort of a sense of how the Fed would resolve these questions. We could agree, we could disagree, but we knew what the standard is. Initially, it seemed that the Fed was really concerned with liquidity, making sure there was liquidity in the marketplace. That seems to have eased some now. Are they trying to ensure solvency? Well, what is their role in trying to repair a very broken economy?
Well, I think they're trying to figure out exactly what lane on this multi-lane highway they should be in. And again, if you look at Chair Powell's press conference on Wednesday, I think he tried to project some realistic expectations for what the Fed could do. He emphasized that they were not allowed to lose money. He emphasized that Treasury had a role here. He also made reference to fiscal measures. And David, I would say that at this juncture, the best thing for the Fed and the best thing for the country is that we all pivot more towards looking at a set of fiscal measures that in the next legislative package will extend beyond July the unusual and very necessary measures to deal with what's going to be a long period of double-digit unemployment in all likelihood, to make sure that we're getting money into the hands of EMTs and medical professionals and first responders, and to just make sure that those people who have been most affected, and what have we got now, 30 million jobless claims in the last 6 weeks, that over an extended period of time they're going to have resources. So I really think that the upshot of what I say about the difficult position of the Fed is it's not just something that's hard for them institutionally, and we say, well, tough luck, you're the central bank. This is a question of where the best way to spend money over the next 2 to 3 to 4 quarters is going to be.
So, Dan, as you know, there's discussion that going on in Washington. It seems to be already a bit of a political hot potato. Unpack it a little bit. If you were to be able to write the next bill, that spending bill, what would it do? Would it be grants to states and local? Because that is something that's very controversial. Is it another check, $1,200 or some amount of check given to people directly? What would you think would be the most effective way to help the economy?
So my top, I think both of those should be components, but my top priority would be an extension and probably some refinement of the special measures that were taken on unemployment in the CARES Act, which, as you know, at this point will lapse in July. And as I said, CBO expects that we're going to have double-digit unemployment into and through next year, and most private analysts would agree with that. So I would say that trying to make indefinite the extension of UI to the gig workers, to part-time workers, trying to cover those who are not going to be able to enter the workforce, and also making sure that these benefits don't run out. I think that really should be the top priority. I did just a little back-of-the-envelope computation here, and even if you had no contribution from the states, if the federal government were to cover 2/3 of the average annual wage of American workers, over some period of time. At 20% unemployment, that's about $90 billion a month. Now, that's a lot of money. But remember, we've been appropriating, 250, 300 billion, which goes in a week under the PPP. So relatively speaking, if you think about putting the money where it's most needed in political and economic terms, I think that would be the priority. As I say, I also would do some of the things you mentioned, which is to those who are simply in need but not unemployed as such, to try to get some money out to them. And absolutely, how can we not be assisting the police departments, the fire departments, the EMTs, the ambulance drivers, the doctors and nurses, and those people from the public health agencies who are on the front lines? Their expenses and their risk are extraordinary, and it seems to me that there's nothing more common sense than putting that money where, talk about going to good use, it's going to the best possible use.
Yeah, as everyone says, they are our heroes in this crisis right now. Dan, thank you so very much. That is Professor Dan Turrillo of Harvard, and of course, he's a former governor of the Federal Reserve. And we have a headline breaking right now. Carnival faces a House probe over virus outbreaks on its cruise ships. We've seen various media outlets reporting that Carnival knew about this pandemic, and it was on ships, and it kept going. So now it apparently the House of Representatives is going to have an investigation into exactly what happened there. Coming up next here, we're going to talk about what was already a complicated presidential race. It's taken another turn today as the former Vice President Joe Biden takes the airwaves. We talk with our political contributor, Jeannie Zaino of Iona College. That's coming up next on Balance of Power on Bloomberg Television and on radio.
There are times when you have to go it.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
Coming soon, Ricochet, the new action film written by, directed and starring Euro Millions winner Timothy Barker, with music by Timothy Barker.
Tonight's Euro Millions jackpot is a massive £35 million. That's dream come true money. Euro Millions from the National Lottery. Your numbers make amazing happen. Play online or on the app. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
The loungewear essentials that ease you into your comfort zone. The Fitbit that helps you step up your fitness goals. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can enjoy being the best possible you. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Long have I waited. The epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours. The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Dating can be tricky, especially when you can't meet face-to-face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested. And have an activity plan for your date. This will help break the ice.
Download Bumble today.
We're all having to get used to the new normal. And at Birkbeck University, we're experts at being adaptable.
As London's Evening University, we've been flexing around the lives of busy commuters for nearly 200 years. And you can find everything you need to secure your place for autumn online. From expert advice to virtual tours, a live chat with our students and course applications. Make the new normal, studying for the career that you really want. Search Birkbeck, and it's new problem solved.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries, just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments. I'll fight you. Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
Dreamlab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Hey y'all, we're taking the Marty Party to a whole new level with the Marty Smith's America podcast with Gerald McCoy.
I truly believe that Carolina made a mistake letting Cam go. This is not a personal shot at Teddy Bridgewater. This could have been Andy Dalton. This could have been whoever they brought in. Cam has so much left. Somebody's really getting a great one, man. And I don't think people really understand what they're getting.
Search Marty Smith America to listen.
Hey, it's Jacoby here from Jalen and Jacoby. And after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air. And they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today.
Without question that the allegations were absolutely not true. But also, I think even more importantly, or equally importantly, he said that this accuser and all women have the right to be heard and that the allegations should be taken seriously and vetted. And I think now the question is going to come down to this issue of these personnel papers that he has asked to be released. And also, I think questions about his own papers, which are at the University of Delaware. But I do think he had to do what he did today, and I think he was fairly effective and straightforward in saying that absolutely unequivocally the allegations are not true.
Jeannie, is there any difficulty or irony here for Democrats in particular because of the Me Too movement, the way that Kavanaugh was treated as he was nominated for the Supreme Court of the United States and saying we should be listening to women? Or can the Democrats thread this needle, as it were?
It's a difficult balancing act, I think, for Democrats in particular, because on the one hand, they do support Biden's candidacy, obviously, and on the other hand, they have been the most vocal champions of the Me Too movement, and the Brett Kavanaugh hearing in particular raises in many people's mind a question of hypocrisy. And I think the real thing to think about here is how are the organizations, the corporations, in this case the Senate, in which the individuals were working, how did they handle these allegations at the time, and how can they be vetted 26, 27 years later? So I think Democrats do have a balancing act here, but I think they have to be very clear in calling for full investigations, full transparency, and openness. There is absolutely no question about that at this point.
So, Jeannie, it's not just the Democrats who have some challenges. Also, President Trump has some challenges. There have been various reports that his approval ratings have been suffering some because of this coronavirus, although he did tweet out one Gallup poll that said he was doing all right today. What is his situation? And particularly, some people are saying that Republicans are warning him they could lose the Senate. Is that plausible?
Before this outbreak, I think it was an implausible scenario that they could lose it. I think now it is increasingly a possibility, although I think a long shot. But I do think that the president is feeling some heat. We've heard that he is very frustrated by the fact that his poll numbers, not only have they not risen as they normally would in a crisis for a president, but they've dipped to a certain extent. He's gotten a lot of criticism for his handling of the epidemic, and the campaign has now gone on the offensive. this week releasing a huge ad buy to try to bolster what they say the president has done in handling the pandemic, and to make the case, particularly in swing states like Michigan and Pennsylvania and Wisconsin and others, that the president is doing the right thing. The economy is going to open up, and we are going to get through this under his leadership. And of course, we see the Biden PACs at least countering that message with some really sharp advertising in the digital realm out in the last few days.
So let's talk about the election in November. However it happens, it will happen, we believe. Normally, it's how the economy is doing. It seems very difficult to believe the economy will be back by November. What does the president have to do, President Trump have to do to show that it's on its way back? How much forward momentum does he need to do all right in November?
You know, I think he does have to show that it is moving in a positive direction. I think the last month on Wall Street that was just reported out yesterday was helpful to the president. But I do think it's going to take a lot more than that. And in particular, again, in these swing states, which may end up being some of the hardest hit here, he is going to have to show that people who supported him during the 2016 campaign, not only has he really delivered, but that he's going to get them through this crisis. And I think he's having a tough time doing that at this point, but that's part of this ad buy that's going on to show that this wartime, quote-unquote, president has done what he needed to do to pull the country through this.
And Jeannie, just one last one on those swing states such as Michigan, my home state. Are we now seeing the politicization of the reopening? We saw those armed protesters now enter the state capitol there yesterday. Are we seeing something like a new version of the Tea Party when it comes to let us out of the house?
Yeah, absolutely we are. And you know, I think it's an important debate to have, and it's going to continue throughout the campaign. And I think, in fact, beyond, this may be equivalent, as you mentioned, to the Tea Party movement. These are people who make a claim that cannot be easily dismissed, that their liberties, their right to work, for instance, which is critical to all of our lives, has been, you know, unduly mismanaged by governors and others. And I think they're going to be making this case, and it's a case that resonates beyond just Trump supporters, but I think it has been politicized to that extent, and the protesters are being supported, we know, at least by some of the president's supporters. So I think we're going to see a lot more of this as we go into the fall and beyond.
Okay, Jeannie, always a delight to have you on. Thank you so much for joining us. Jeannie Zaino of Atlanta College. She is a regular Bloomberg political contributor. And now a program note. Tonight at 6 p.m. Eastern Time, we have Wall Street Week. And this week we'll be joined by Gillian Tett of the Financial Times, as well as Larry Summers of Harvard. That's coming up at 6 p.m. tonight Eastern Time. This is Balance of Power on Bloomberg Television and on radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seizechange.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republican White House.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here, you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for Stock of the Hour, and you guessed it, it's Tesla. We talked about it earlier in the hour. Tesla shares are plummeting now after its CEO said it was overpriced. And here for more is Abigail Doolittle. So one of the questions is he right? Is it overpriced?
You could certainly make the case that the shares of Tesla are overpriced. This is a company that you typically aren't supposed to talk about valuation on just because it's more of a visionary company and stock trading on the future. But if we do bring valuation into it, very overvalued, trading at a greater than 100 times PE, also a huge EV to EBITDA. The chart itself is well overextended. Crazy moves on the year. So yes, I think that folks on the street could certainly support that case. And also, if you look at analysts, I believe there are only 9 buys. There are 14 holds and 14 sells. So most folks on this street are on the sidelines at best. What's interesting, David, is it's really hard to make sense of this and why Elon Musk would make this sort of move on Twitter and these sorts of announcements. It seems to be a little bit of a continuation of the earnings call the other day when they put up what was a good quarter, a profit. They have a great cash position, moving in the right direction. But he did go off on a little bit of a rant around wanting freedom for people to end this lockdown.
Yeah, he's been saying that for a little while now, but we've had him tweet before going the other way, saying it's going to go up a lot, and he said he was in part trying to really punish the shorts. Is it possible he's helping the shorts this time?
Well, I suppose he is helping the shorts this time, but what's interesting is there aren't as many shorts as there were in the past. This stock is one of the more well-known shorted stocks out there, meaning that there are folks out there selling the shares, hoping to buy them back lower, a bet that the stock is going to go down. Now, traditionally, or for the last few years, there's been basically a 30% bearish short interest. That's very high. Right now, it's closer to 14%, so a lot of those shorts are out. One of the famous shorts, though, David Einhorn, and he was tweeting against Musk yesterday or the day before, basically on the accounting. It will be interesting to see whether there are any problems with the accounting. Too hard to say for certain, but always lots of controversy and drama around Tesla, David.
Always. Okay, thank you so much to Abigail Doolittle. Coming up here, we're going to have a true expert on viruses. He is Dr. Michael Kinch, and he's written the book on the subject. He's going to handicap the race to find a vaccine for the coronavirus. This is Balance of Power on Bloomberg Television and on radio.
This is the Bloomberg Money Minute. U.S. stocks are falling on disappointing earnings news and corporate warnings tied to the impact of the coronavirus. The Dow is down 590 points, NASDAQ dropping 268 or 3%, S&P 500 falling 80 points. Shares of Tesla are down after CEO Elon Musk said the electric car maker's stock is priced too high. U.S. factory output posted its steepest decline since the 1940s as the coronavirus pandemic halted conveyor belts and assembly lines nationwide. And college students kicked off campus by the coronavirus have a new extracurricular activity, litigation. Undergrads have sued more than 50 schools, demanding partial tuition, room and board, and fee refunds after the schools were shut down. Donna Wilson, Bloomberg Radio.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day, she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for you to talk to someone about it.
I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
This probably wasn't what you expected.
Deaths from the coronavirus continue to climb.
But now you need to become an expert fast.
For the very latest, we're joined live.
You'll do it with the latest information, and we'll be right here to help.
Are you concerned that the economic damage could linger longer than the virus itself?
Bloomberg Daybreak with Karen Moscow and Nathan Hager. Weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Trump yesterday told us it was realistic to think we might have as many as 300 million doses of a vaccine for the coronavirus as soon as the end of this year. But the road to a vaccine has always not been a straight one through history. And we are very pleased to have with us now Dr. Michael Kinch. He is Assistant Vice Chancellor of the Medical School at Washington University. And for our present purposes, very importantly, he's the author of Between Hope and Fear, A History of Vaccinations and Human Immunity. So he really is an expert on vaccinations. Dr. Kinch, thank you so much for joining us here. Is it realistic, from everything you know, that we could have 300 million doses of vaccine as early as the end of this year?
It seems virtually impossible if you look at it both historically and practically. The time needed to make a vaccine averages between 10 and 15 years. Even if we were to put that on the so-called warp drive, it's really challenging, if not impossible, to imagine how in less than 4 years we would be able to get a vaccine that would be both safe and effective.
So, Dr. Kinch, we're told that there are several vaccines actually that have started clinical trials, both in the United States and around the world already. That suggests that maybe we are on our way. I know Johnson & Johnson's starting something in September, but how long do those clinical trials have to go?
Well, so in general, a vaccine clinical trial needs to be quite large and go quite long, and the reason for that is a fewfold. One is that you have to, when you develop a vaccine, make sure that you are not just inducing protection against, in this case, a virus, but that protection is long-lived. And so you oftentimes need to look many years out. Now, even if you're willing to sacrifice that and say, okay, we'll worry about the short term in the short term and the longer term over a longer period of time, you still have the question that vaccines induce immunity. They cause the immune system to recognize something that they hadn't recognized before. Sometimes, by bad luck, that immune recognition might actually attack normal tissues. And so then you run into a safety risk of inducing basically an autoimmune disease like, for example, a lupus or rheumatoid arthritis. So you've got to be very careful in your clinical testing to avoid that.
So I think some of us who don't understand what you understand think, wait a second, this is the first pandemic in over 100 years now. We have resources we never had before. If we put enough resources into this with the sophisticated scientific industry that we have behind it, we can short-circuit that. Is that wrong?
Yeah, we know certainly our science is infinitely further along than it was 100 years ago when we were dealing with the Spanish flu. But unfortunately, there are certain practical issues. For example, if you just look at an influenza vaccine, just a standard seasonal influenza vaccine, it takes roughly 8 to 10 months. Once you've identified the vaccine and the virus that you're going to target, it takes us 8 to 10 months just to get enough vaccine to start administering to people. And that's in a situation where we already have largely optimized how to manufacture an influenza vaccine. So if you talk about now a COVID-19 vaccine, where we don't know what that vaccine is going to look like. We don't know if it's going to be a dead virus, whether it's going to be what's known as a recombinant virus, where you take a protein that you purify. We don't know whether it's going to be one of these exotic mRNA vaccines. And without even knowing that, it's impossible even to anticipate manufacturing. So, realistically, if you're talking about developing vaccines for 350 million Americans, much less 7 billion people on the planet, this is going to take potentially years just to get the logistics of that straight.
Is there an analogy in history of a virus that you think is similar to this, or a vaccine process that's similar to this that might instruct us about our experience this time?
Yeah, as I wrote last week in a piece, There are a number of different parallels with what occurred with the polio vaccine. And what ended up happening was that polio for many decades had actually been the dread of parents, especially in the summertime. And pools would be closed, and kids would be quarantined and isolated, not all that different than what's going on today. Then suddenly, Jonas Salk comes forward in the early 1950s and says, I think I've got a way of potentially coming up with a vaccine for this. The world's attention was focused on Salk in the same way that I would argue it is on Moderna and some of these companies that are developing vaccines today. And what ended up happening was that Salk rushed through his vaccine. It was safe. It was effective. That rushing, by the way, took 3 to 4 years, until they went from the first human trials to when they were starting to deliver it in widespread use. But then we ran into a problem, and that is that the manufacturing of the vaccine, and in the case of the Salk vaccine, it was a killed vaccine. So you would take polio virus, you would kill it with chemicals, and then you would administer it to people to induce immunity. That killed vaccine wasn't properly treated because we were rushing things so much. And a number of children in California ended up getting polio from live vaccine that hadn't been properly killed. So there are some parallels that if we rush things, you risk both safety, but then also you run the risk that you end up with a sloppy vaccine. And that's a whole other part of the question.
Can we avoid some of the risks that you're describing? Because we know a lot more today than we did before. I mean, back in those days, we didn't have the double helix. We hadn't discovered the structure of DNA and things like that. Can that really advance us so that we can actually, and maybe with artificial intelligence, run a lot of these tests in advance, really know the structure of the virus and the structure of the vaccine and shortcut some of this?
Some of this we can, and there are some of the early stage discovery work that we can basically bypass that. And that'll save us certainly many months and arguably a few years off of that 10 to 15 year time frame. But unfortunately, the immune system is an amazingly complicated thing, as evidenced by the fact that everything from rheumatoid arthritis and all of these autoimmune diseases that we're confronted with, as well as the fact that we're just learning about the immune system develop new cancer therapies. So the point is that we've got to be very careful in figuring out how to design a vaccine that will properly engage the immune system without causing toxicity. And that's not an easy thing to do. And keep in mind that we've been battling as a species coronaviruses from long before, for millions of years and billions of years, arguably. And the problem with this is that there is a counterattack evolution that's been going on for all of this time. And many viruses, and we don't know this of COVID-19 or SARS-CoV-2 yet, but many viruses actually have evolved so that the immune system can't see them very well. And we see evidence of that from the fact that SARS vaccines, many of them that have been developed, really only ended up triggering immunity for a year or two because the virus was able to basically use its evolutionary advantage to avoid the immune system.
Right. So, Dr. Kinch, that was truly fascinating, if a bit sobering, but I really appreciate you being with us. That's Dr. Michael Kinch of Washington University. And now we go to Mark Crumpton for Bloomberg First Word News.
David, thank you. Prime Minister Giuseppe Conte is apologizing to Italians, quote, on behalf of the government for delays to their financial aid. He pledged assistance to workers and small businesses is in the pipeline and will be, in his words, stronger, faster, and more direct. He also said parts of the country may be able to open sooner than expected if rules are followed and the contagion curve declines. Encouraging signs out of Germany, the number of new coronavirus cases dipped, holding below 2,000 for a 7th straight day. The German government began relaxing some lockdown measures this week, but it will maintain travel restrictions and most other curbs on public life. In Japan, the state of emergency that was set to end next week will stay in place for at least another month. Prime Minister Shinzo Abe said today the country's medical systems are still under severe pressure. Japanese health officials say they have more than 14,000 coronavirus cases with over 400 deaths. Experts say the numbers could be significantly higher. Joe Biden's denying a sexual assault allegation made by a former Senate staffer. The presumptive Democratic presidential nominee said in a statement today, quote, "They aren't true. This never happened." Tara Reid says Biden assaulted her while she worked in his office in 1993. This is the first time Mr. Biden has publicly commented on the accusation. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Coming up on Balance of Power, we're going to talk with Richard Trump. Richard Trumka, he is the president of the AFL-CIO. This is Balance of Power on Bloomberg Television and on radio.
In these times of loss and crisis,
this is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
The pressure washer that means your patio is barbecue ready. The 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Long have I waited.
the epic finale.
Good people will fight if we lead them.
Of the legendary saga can be yours.
The Force will be with you.
Always.
Own Star Wars, The Rise of Skywalker.
What are you doing there, 3PO?
Taking one last look, sir, at my friends.
Get it now on the Apple TV app.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Fraudsters are getting more and more sophisticated, and it's easier than ever for people to make an honest mistake and lose their money. TSB doesn't think anyone should have to pay for being an innocent victim of fraud on their account. That's why they've created the TSB Fraud Refund Guarantee. To find out more, visit tsb.co.uk. Terms and conditions apply.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments. I'll fight you. Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
Dreamlab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player
active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is, we've been waiting a long time for this. We actually, in terms of like active
Round the bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one, not only.
Catch these and more MLB podcasts right here on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
If you've used TuneIn much, you probably already know how to favorite your top stations and podcasts for quick access. But did you know you can organize your favorites too? Under your favorites page on the TuneIn app, hold and drag the stations to arrange the order to your liking.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
On where the opportunities are. We've got a lot of short cycle capital in our budget. That's one of our advantages. I mentioned we're different. We came into this with the strongest balance sheet in the industry, a very low break even, and a very flexible capital budget. So we're in control of those choices. And the market signal right now isn't calling for more near-term production. So that's why it makes sense to reduce capital in the short cycle part of our portfolio. And we're in control of that. The OPEC actions really affect flowing barrels as opposed to the investment of capital to produce barrels into the future. So and as I said, we'll reduce that primarily in our short cycle activity.
For that production, both for the flowing production and then the short cycle, how quickly can that come back, or is any of that, do you anticipate, permanent?
Well, it can come back relatively quickly. These are things that we actually do for maintenance purposes. We bring wells down and facilities down for storms, hurricanes, things like that. So our people are very good at bringing production down safely and then ramping it back up. So we'll come back up in a matter of weeks when we start to see the market signals that would suggest it. And this can be done in a way that is very careful and doesn't cause damage to wells or reservoirs.
That was Chevron Chairman and CEO Mike Wirth speaking with our colleague Alex Steele earlier today. And tune in later today at 6 p.m. Eastern Time for the next edition of Wall Street Week. We'll be joined by Larry Summers of Harvard, former Treasury Secretary, as well as by Gillian Tett from Financial Times. And coming up here on Balance of Power, we're going to be talking with Richard Trumka. He is the president of the AFL-CIO. This is Balance of Power on Bloomberg Television and on radio.
To be in the markets now, you need nerves of steel.
I mean, we're not supposed to be hysterical.
And Bloomberg surveillance.
Let's just start with something extreme.
What are you comparing this to?
Tom Keene and Jonathan Ferro.
Your call, your message to your clients on a morning like this morning.
Weekday mornings at 7 Eastern.
What are you doing to adjust your economic growth numbers?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
Fiscal stimulus could really shape things in the months ahead.
Bloomberg, the world is listening.
Listen, as a hiring manager, I've got to tell you, the best job candidate isn't always the typical candidate. Sometimes they're a grad of life.
Meet the grads of life. Young adults of unique determination and experience. An ideal fit for your company in an entry-level position, internship, or mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
Sometimes the best candidates aren't the ones you're used to.
Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and gradsoflife.org.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. So Amazon yesterday announced its earnings, and it said it was getting a lot more revenue in, but it was basically taking all that revenue and investing it in part in trying to protect its employees in the workplace. We welcome now Richard Trumka. He's the president of the AFL-CIO. His union represents over 12.5 million workers across the country. So Richard, thank you so much for being back with us. Take Amazon as an example, because they say they're spending a lot of money, including in hazard pay, in leave, and things like that. They are doing an awful lot investing money. At the same time, you have some Amazon workers saying it's not enough for us to really feel safe. What do you think about Amazon and the job it's doing?
Job of protecting its workers. Amazon had a poor record before. Its warehouses weren't in good shape. And when the coronavirus came, they didn't do a very good job at all. Workers were too close. There was no PPE. And when workers pointed that out, instead of working with the workers, their own workers, they fired